Good morning, students, and welcome you all once again in the video lecture on Ind AS 7 Statement of Cash Flows. Good morning, Miruna. Good morning, Priya, Chitra, Ankit, Geet, Udandam, Megha, and good morning to all of you. Friends, today's session is again on one of the component of the financial statement. But what is the unique thing in this component of the financial statement? Can anyone tell me? If I talk about component of the financial statement, there are 5 components: balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts, right? And we have already read and understood the balance sheet. The format is given under division 2 to schedule 3, and guidance is also given under Ind AS 1, right? It reflects the financial position. Balance sheet is prepared on accrual basis. Statement of profit and loss, the guidance is given under Ind AS 1, and division 2 to schedule 3 has given the format, and this provides the financial performance. It is prepared on an accrual basis. Statement of changes in equity, guidance is given under Ind AS 1, format is given under division 2 to schedule 3, and it is also prepared on accrual basis. Cash flows, statement of cash flows, right? There is no guidance given under Ind AS 1. Ind AS 1 says that please go to Ind AS 7. There is no format which is given under Division 2 to Schedule 3. Division 2 to Schedule 3 says that please go to Schedule 3. Sorry, please go to Ind AS 7, not Schedule 3. Please go to Ind AS 7, right? So the only guidance on statement of cash flows is given under Ind AS 7. And it is not prepared on an accrual basis. It is prepared on a cash basis. In a statement of cash flows, you are recording the movement in the cash flows. Means when cash is going out and when cash is coming in. So you are recording those cash and you are telling those cash with the closing cash and cash equivalent. Then there is a notes to accounts. And this notes to accounts is as per Ind AS 1, right? So guidance is given under Ind AS 1, and Division 2 to Schedule 3 also provides the guidance on notes to accounts, and other Ind AS also provides the guidance on the notes to accounts. And notes to accounts gives your quantitative and qualitative disclosures. So this was on the component of the financial statement. Okay. Now coming to the statement of cash flows. Friends, is it a new concept, or you guys have already covered this statement of cash flows in your CA journey? Have you
already covered AS3.
AS3. What was the title of AS3?
Cash flow statement.
And what is the title of Ind AS 7?
Statement of cash flow.
Statement of cash flows. So my dear students, you know, these words are very, 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 very important, right? While meaning is same. And believe me, you are thinking that, sir, how does it matter whether we say cash flow statement or statement of cash flows? NAFRA you have heard about, National Financial Reporting Authority, right? It's a regulator, right? And NAFRA is auditor's auditor. So in one of the company, and if my memory is correct, so IGSEC Limited, one of the listed company, they have used the word cash flow statement, and NAFRA highlighted that this title is not right because the schedule 3 Ind AS 1, it talks about that cash flow statement has to be prepared as per Ind AS 7, and Ind AS 7, the title is statement of cash flows, right? So the right title for the component of the financial statement of this listed company is statement of cash flows, not cash flow statement. Okay, is that clear? Very good. So since you are pursuing your articleship, or probably after qualification you will join a chartered accountancy firm as a partner or as an employee, so you will be handling both set of clients, one who is preparing their financial statement under accounting standard and the one who is preparing their financial statement under Ind AS. Okay, For accounting standard, the title is cash flow statement. For Ind AS, the title is statement of cash flows. So many of you have indicated, yes, sir, we have already covered cash flow statement or statement of cash flow under accounting standard 3. Under accounting standard 3. Very good. So friends, you are absolutely right. And believe me, whatever you have covered, whatever you have read, whatever you have seen in accounting standard 3, okay, 90%, more than 90% is same. More than 90% concept are same in comparison to accounting standard 3. There is no much change from AS3 to Ind AS 7, right? From the practical perspective. Is that clear? So, Chitra, what is your understanding on statement of cash flows? Or Megha, you can unmute yourself and please let me know whatever is your understanding on statement of cash flows. Megha or Chitra, can you please unmute? No one? Okay, so Chitra has written in the notes, it provides details of cash inflows and outflows, movement in cash and cash equivalent during the year. So basically, if I talk about cash flow statement, you guys have heard about the 3 activities in the cash flow statement. Have you heard about 3 activities in the cash
Yes,
flow
sir.
statement? Yeah.
Yes, sir. Cash flows from operating activities, cash flows from investing activities, cash flows from financing activities.
Cash flow from operating activity, investing activity, financing activity, right? So the entire cash is divided into 3 categories: operating activity, investing activity, financing activity. When you add all the cash from all these 3 activity, it will give you what? It will give you total of movement.
Total cash flow during the year.
Total movement in cash, whether total cash generated or total cash spent during the year. Okay. So when you add the total movement in your opening cash and cash equivalent, what you will get?
Closing cash balance.
You will get closing cash balance. Closing cash and cash equivalent. That should tally with your balance sheet. That should tally with your balance sheet. Okay. Yes. So Megha has written on the chat box and she has written, sir, my mic is not working. No problem, Megha. It is prepared on cash basis. Very good. And has 2 methods, direct method and indirect method. It splits cash flows into operating activity, investing activity, and financing activity. Very good. Thank you. Yes. Very good. So friends, let me take you on the Excel file. Let's discuss a small case study why this statement of cash flow is important. Generally, people are not looking at cash flow statement, but it is a very important component of the financial statement, right? People are looking at balance sheet, P&L, but they are not moving into the cash flow statement, and it is very important. Let me tell you why. I hope my Excel file is visible.
Yes, sir. Visible, sir.
Is it visible? Okay.
Yes, sir.
Okay. So friends, let's say there is a company ABC Limited. Okay. The sales of the company is 100 crores. Okay. The purchases or expenses are 60 crores. Okay. The profit before tax is 40 crores. Taxes are 12 crores, 30% on the profit. 28 crore is profit after tax. After looking at this P&L, profit and loss, right? What is your first impression? This is a profit-making company. There is a 40% margin before tax. The company is earning 40% on the revenue. And after tax, it is 28% margin. After tax, it is 28% margin is after tax. Okay. Friends, this is a highly profitable company, right? Great performance. and everybody wants to join, wants to invest in this company. Yes or no?
Yes,
Yes,
sir.
sir.
Now, let me give you more information. Let me give you more information. The entire sale is on credit basis for more than 1 year. Whatever sale you are looking at, right? The entire sale is on credit basis, and it is on credit basis for more than 1 year. And these entire expenses are on cash basis. Cash basis means like salary, rent, telephone expenses, electricity expenses, right? Other administrative expenses, the payment to supplier, creditors, all these are happening every month. Okay. It is on 1 month due basis.
Sir, then it will be a cash deficit company, na?
So friends, looking at a cash flow statement, you are absolutely bang on. This company is a great company. Looking at a statement of profit and loss. But when you look at cash flow statement, how the cash flow statement will look like for this company? Cash flow statement, okay? So if I prepare my cash flow statement, what happens? Cash flow from operating activity, okay? Operating activity. Cash flow from operating activity. What is my cash flow from operating activity? If I'll apply direct method,
Deals, sir.
if I apply direct method, so what direct method says? Direct method says you need to record cash collected from debtors or customers, cash collected from customers or debtors, whatever. So how much cash is collected from customers? Zero.
Zero.
It is entirely on credit basis for more than 1 year. Second, there is also risk of credit default. रिस्क भी है ना, अगर 1 year के ज्यादा है, 1 year से ज्यादा पे आप सेल कर रहे हो क्रेडिट पे, there is a risk of default also, right? Now, cash collected from customer is zero. What about now then cash paid for expenses oblique purchases? How much is cash paid for expenses oblique purchases? 60.
60.
The entire
Yes.
cash, the entire expense is on this thing cash basis 60.
Yes,
Then
sir.
you are also paying your taxes. You have to pay advance tax. You have to deposit advance tax also, right? Income
Yes, sir.
taxes, assuming you have paid advance taxes. So how much is tax? 12.
Yeah, 12.
12.
What is your net cash flow from operating activity? What is your net cash flow from operating activity?
It's negative
Negative
70.
72.
It will be
Negative
minus
72. So looking at this, cash flow from operating activity, will you invest in this company? It is generating negative cash. It is generating negative cash means the operating activity reflects the operation of the company. Operating activity reflects the operation of the company. And what operating cash reflect? Operating cash reflect whether the company is able to generate the sufficient cash to run its operations, right? In this case, the entity's cash flow from operating activity is negative, which denotes that the entity is not able to generate the sufficient cash to run its business. It means how this entity is running its operation. Either entity is investing its own funds or the entity is using the borrowed funds. The entity is using the borrowings to fund its general operations. The entity is using the borrowing to fund the general operations. Okay. So friends, and that is why a statement of cash flow becomes very, very, very important to judge to evaluate the liquidity performance of the company, to evaluate the actual performance of the company in spite of the fact the balance sheet is bigger and bigger. The balance sheet is very large, huge, healthy, and your P&L is reflecting a great margins, a great profits. Okay. Because when the entire sale is on credit basis, then what happened on the debtor side? What happened on the asset side? The debtor will come. And when the debtors will come, then what happens? Your asset size will become fatty, right? And on an accrual basis, you are preparing your financial statement on accrual basis. So in that case, Doesn't matter. You are making your sales on credit basis, but you are recognizing your revenue. Yes or no? Right? And that is why this cash flow statement of cash flow becomes very, 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 very important. Right? So friends, few of you were thinking, sir, it is a direct method. And how the indirect method will be there? And what about indirect method? This was a direct method. Okay. You guys have heard about direct method, indirect method. This is a direct method. So how I compute the cash flow from indirect method? Yes.
Sir, we'll take profit after tax, and in that we will we will add this depreciation and all the non-cash items.
Okay, very good.
And the operating items we will add, so that we can get, and we will subtract all the operating items so that we can get net cash flow from operating activities.
I will start with profit before tax. Okay?
Yes, sir. Even I meant to say profit before tax, we will
I
consider
will start
it.
with profit before tax. What is my profit before tax? 40. Okay. Then what I'll do? I will add or less. I will adjust, add or less. What add or less? Non-cash item. Non-cash item. Non-cash item means like depreciation, like foreign exchange difference. Okay. Provision for bad debt. These are kind of non-cash item.
The
Then what
exceptional
I do?
item.
After non-cash item, what I'll do after non-cash item? I will adjust, add or less non-operating item, means which is investing item or financing item. For example, interest paid on loan. Interest paid on loan, is it an operating item or financing item? Interest paid on loan.
It is a financing item.
It is a financing item. It is a financing activity. Okay. So then I will add or less. I am giving you some, again, I am making your revision, right? Non-operating and non-operating item, which is investing item or financing item, but nothing is there, right? Nothing is there in this case. So in this case, then what we'll do? So this will give you the operating profit before what this
Tax.
will give? What operating profit before changes in working capital, before changes in working capital, or before changes in operating assets and liabilities, right? Then my dear friends, उसके बाद क्या करेंगे? Then you will adjust your changes in working capital. You will add or less changes in working capital. In this case, what will happen if the entire sale is on credit basis? What this sale has generated debtors? Assuming this was the first year. So closing debtor. Closing is how much? How much is the closing debtor? 100. Assuming opening debtor was 0. This was the first year, for example. Opening was 0. Okay. So then what I'll do? Your debtors are increasing. Increase in current asset. What increase in current asset reflect?
It will decrease.
Less. Increase in current asset. Reflects that you are not able to generate cash. It means the cash is not coming. So increase in current asset. This is negative cash. Okay. Minus 100. Then it will give you cash flow from operations. Right? This was the format. Cash flow from operations. Then less. What? Less taxes paid. How much is your taxes paid?
12 crore.
12 crore. Okay. So what is your net cash flow from operating activity? This plus this. Yes. This is your net cash flow from operating activity. Is that clear? Any doubt? The answer is same, 72. But here we have started from accrual to arrive at cash. On the left side, we have only taken cash. Friends, this direct method, indirect method is clear? Yeah?
Yes, sir. Clear, sir.
Okay. So you understood this thing? The answer is same in both the cases, right? Okay. Very good. So friends, we understood that why this statement of cash flows are important. We understood this. Okay. And we understood and we are already aware that there are two methods, direct method and indirect method. And friends, there are three activities: operating activity, investing activity, financing activity, right? There are three activities. The entire cash flow in the business, cash flow means cash inflow as well as cash outflow. The entire cash flow of the business, is bifurcated into three categories, into three activity: operating activity, investing activity, and financing activity. Okay. And friends, what are these three activity? Operating activity means activities relating to the principal revenue producing activity, right? Means your ordinary activity, hardcore operations of the business. What is investing activity? Investing activity means acquisition and disposal of long-term assets and investment other than cash and cash equivalents. Okay. Investment in mutual funds is what? Is it an operating activity or investing activity?
It is investing activities.
Investing activity.
Investing activity. It is investing activity. Okay. It is investing activity. Okay. Fixed asset sold. PPE sold. Operating or investing?
Investing.
Because the business is not to sold the PPE. What is PPE? PPE is something which is held for the future
Operation.
economic benefit of the entity. If somebody is into the business of selling fixed asset, then it is no more a fixed asset. It will become the inventory, right? It
Yes,
will
sir.
become the inventory. So sale of fixed asset, sale of PPE is investing activity. Purchase of PPE is investing activity. Okay. So operating activity, investing activity. What is financing activity? Financing activities are activities relating to the capital structure of the entity. Okay. So friends, we are aware about these three activity. Anyone who is not aware about these three activity, please let me know. I'm just setting the context. We'll talk more about this. But have you guys seen these three kind of activity? Are you aware about these three kind of activity? Because you all have covered accounting standard 3 in your CA inter, right? Yes? Okay. So operating activity, revenue producing activity. Investing activity, acquisition and disposal of long-term assets. Financing activity is activity relating to the capital structure of the entity. Cash flow statement is required to be prepared on a cash basis, as we all are aware. And what are the methods of preparation of cash flow statement? Two method, direct method, indirect method. Friends, this direct method and indirect method is only applicable to the operating activity. Doesn't matter you are applying direct method or you are applying indirect method, you will prepare your cash flow statement, right, for investing and financing activity. So if you are applying direct method or indirect method, your investing and financing activity will always be on the direct method. It will always be on the direct method. Means whatever money you have paid, whatever money you have received. So that will be the only thing, right? For example, your investment in mutual fund, right? You have invested 1,000 rupees in your mutual fund and the market value has gone up to 1,800 rupees. In your balance sheet under Indian accounting standard, you are recognizing you are measuring your mutual fund at fair value. In your balance sheet, it will come at 1,800 rupees. Right? But so this 1,000 become 1,800. Okay. And this 800 rupees of mark to market gain, unrealized gain, will come in your profit and loss also. But will there be any movement which will come into the cash flow statement investing activity?
No, sir. It's a non-cash activity.
It's a non-cash item. There is a movement. The value of the investment has increased, but there is no any cash which has come in or cash has gone out. So there is no movement in investing activity. Why? Because investing activity is not prepared on a indirect basis. Your investing and financing will like a cash account. It will always be on a direct method. The only difference in direct method and indirect method is in operating activity. Okay, is in operating activity. Are you guys clear about all these aspects? Are you guys know all these aspects? Yes or no?
Yes.
Friends, irrespective
Yes,
of
sir.
the fact, right? Irrespective of the fact that direct and indirect method both are allowed in the standard. Why listed companies are always following indirect method? Why listed companies are always following indirect method? Please tell me. Listed company indirect method क्यों follow करती है? बताओ. Because of the SEBI LODR regulation, right? On listed companies, your SEBI LODR regulations are applicable, and SEBI LODR regulation says that the listed companies shall prepare in their cash flow statement as per indirect method. Listed companies are only allowed to use indirect method of operating activities for preparation of cash flow statement as per SEBI regulations, right? So what is the method of preparation of cash flow statement for operating activities? As I told you, it is direct as well as indirect method. For investing activity and financing activity, it is always direct method. Right? Is that clear? My dear friends?
Yes, sir.
Abhi tak
Yes, sir,
things
clear.
are clear?
Yes, sir. Clear, sir.
Okay. Very good. So friends, yes, you're right. Who is saying that? I don't know, but yes, you are right that practically indirect method is used. Okay. So we talked about this direct method, indirect method, operating activity, investing activity, financing activity. And now let me show you one of the, cash flow statement. Okay. One of the cash flow statement of the listed entity, Should I show you the cash flow statement of a listed entity?
Yes, sir.
Yes,
Yes,
sir.
sir.
Please. Yeah, please show to us.
Okay. So let me take you to the cash flow of a listed entity. Then we will discuss one by one all the component, right? Because this is not a new concept. Okay. This is one of the concepts which everybody is aware of. Why? Because of their CA inter and because of their articleship. Okay. Yes. So I am opening the cash flow statement of Adani Enterprises Limited, one of the large listed company. And please let me know if it is visible. The numbers are in crores.
Yes, sir, visible.
The
Visible,
numbers are
sir.
in crores. Okay. Friends, this is cash flow from operating activity. And of course, it is prepared as per indirect method because it is starting with profit before tax. And then they have done the adjustment. Adjustment of what? Non-cash item. Depreciation. Depreciation is a non-cash item. Yes or no?
Yes, sir.
Yes, sir.
Interest and dividend from investment. But this is a cash item. Why they have adjusted this also?
Because this is also
This
in
is financing activity.
activities.
Interest and dividend from investment. This is an investing item. They have invested. That is why they are getting interest and dividend from investments. Yes or no?
Yes, sir.
Yeah. So financing item are those items which is related to the capital structure of the entity. Means which is related to the equity and debt of the company. Means if the company has issued the share capital, what company will pay? The company will pay dividend. Here it is the company is receiving dividend. Yes. So interest and dividend from investment. So this is not the operating item. This is what? This is financing item.
Investing
This is
activity.
sorry. This is investing item. Okay. This is investing item. So what they have done, they have adjusted non-cash item and they have adjusted non-operating item, non-cash item and non-operating item. Non-cash item and non-operating item. You can see this This interest and dividend from investment, where it is coming? 0.01. Where it is coming? It is coming in where? कहाँ पे आ रही है ये?
From investing
From
activity.
operating activity.
It is coming in, नहीं, interest and dividend from investment positive. It is coming in cash flow from investing activity. पैसा आया तो पॉजिटिव दिखा रहे हैं ना, और हमने एडजस्ट कहां से किया? हमने एडजस्ट किया ऑपरेटिंग एक्टिविटी से। क्यों एडजस्ट किया? क्योंकि ये आइटम इन्वेस्टिंग की है, और इसको हमें क्यों एडजस्ट करना पड़ा यहां पर? बिकॉज दिस इज पार्ट ऑफ योर प्रॉफिट बिफोर टैक्स। इज दैट क्लियर?
Yes, sir.
Clear or not clear?
Yes, sir. Clear.
Sir, clear, sir.
So friends, we started with profit before tax, and in the profit before tax, what we will do? We will adjust non-cash item like depreciation, like unrealized foreign exchange rate difference. Okay, so we will adjust like bad debts, provision for bad debts. Okay, like liabilities no longer required return back. You have written back your liability. Is there any outflow of cash?
No, sir.
No, there is no outflow of cash. So these are the non-cash item. So in your profit before tax, you will adjust non-cash item. Then what you will adjust? The items which are not operating item. The item which belongs to investing or financing item, right? For example, interest and dividend from investment. This is an investing item. That is why we have reduced from the profit from operating activity, right? Finance cost. What is my finance cost? It is a financing item. I am paying my finance cost on the debt, on the loan, on the borrowing, right? So you will find this 571.33, it is a cost. So it is added in the profit. Why? Because profit was deducted. But this negative number of 571 you will find in the cash flow from financing activity. Okay. Interest income, it is reduced from profit. Why? Because this interest income is investing item. Okay. So reversal of impairment in value of investment. This impairment reversal, it is a non-cash item. Okay. So friends, what we will do in our profit before tax, we will adjust non-cash item and we will adjust non-operating item. Non-operating item are those items which are investing item or financing item. Okay. Then what we have done? Then we have arrived at operating profit before working capital changes. Then we have done the adjustment, increase and decrease in operating assets and liabilities. Increase and decrease in operating assets and liabilities. Okay. Then we have arrived at cash generated from operations. Okay. And then whatever taxes paid we have reduced, and we have arrived at net cash generated or used in operating activity. You can find that this company has a positive cash flow from operating activity in the tune of 2105 crores. Any doubt, any challenge up to this cash flow from operating activity?
No, sir.
I want everyone's confirmation, not only 2-3 student confirmation. Neha, is that clear to you?
Yes, sir.
Miruna? Saurabh, Anushi, Mamta?
Yes, sir. Clear.
Okay, very good. So then we have arrived at cash flow from investing activity, and you can see capital expenditure on PPE, capital work in progress, intangible asset, proceeds from sale of fixed asset, which is PPE, non-current loans given, sale of investment, purchase of investment, right? Redemption of investment. Okay. So all these investing item. Okay. Interest and dividend received, interest received. You remember these two items were there in the operating activity as a negative.
Yes,
Why?
sir.
Because it has increased the profit. So we have reduced the profit for operating activity. But now we have shown this positive in the cash flow from investing activity, because this cash is of investing activity item. Then there is a cash flow from financing activity. So proceed / repayment of borrowings, issuance of debentures, proceeds from long-term borrowing, repayment of long-term borrowing, payment from issue of unsecured securities, finance cost paid, dividend paid, payment of lease liability. So these are your financing activity item. These are your financing activity item. Then A, B, C. Your ABC is operating activity cash flow, investing activity cash flow, and financing activity cash flow. Then all the total of operating, investing, and financing, right? You will get a cash flow of 44.89 crores. So friends, this entity has generated a cash of 2100 crores from the operations, right? 2100 crores. And this entity has also generated 1000 crore of cash from the financing activity item, because this entity has taken a loan. This entity has taken loan, proceeds from borrowings, okay? Proceeds from debenture, proceeds from current borrowing. So this company has taken a loan and generated 1000 crores. This company has generated 2100 crores from the operation. So how much cash they have generated from operating and financing? 3100 crores. And what they have done? They have deployed this 3100 crores in the long run assets, in the long term assets, right? You can see 3000 crore is the negative investing activity. How come it is negative investing activity? What is the major item? Current loans given. They have given the loans to their subsidiaries or to the other companies, 2400 crores. And they have also invested the money into the non-current investment, long-term investment, 1000 crore. So whatever cash they have generated from the business and taken the loan, so what they have done, they have invested. They have invested. That is why their entire movement of cash flow is only 44 crores during the year, right? And when you add the entire movement during the period plus opening, it will give you closing cash and cash. It will give you closing cash and cash. Is this clear to everyone? Is this clear? Yeah?
Yes, sir.
Very good. Friends, so we understood the meaning of statement of cash flows. We understood three kind of activity. We understood direct method, indirect method, the purpose of preparation of cash flow statement. Now we will discuss all the activities one by one, including the meaning of cash and cash equivalent. And my dear friends, then we will discuss some example of operating activity, investing activity, financing activity, and some important and critical disclosures. Okay. So in the last 40 minutes, almost 40 minutes, I believe you guys are able to remember, you guys are able to revise, you guys are able to just make your memory refresh on this cash flow statement. Yes. Okay. Now, what is the meaning of cash and cash equivalent? The standard talks about the cash and cash equivalent. What is the meaning of cash and cash equivalent? Yeah. So friends, what is meaning of cash? First of all, because it talks about cash and cash equivalent. Cash comprises with cash on hand and demand deposits. Cash on hand and demand deposits. For example, whatever cash you are having in your pocket, that is your cash. And if the money is lying in your bank account, is it a cash or not? The money lying in your bank account. So nowadays you are not carrying cash in your wallet. What you are carrying debit card, ATM card, right? So whenever you are in the need of the money, what you will do? You will go to the ATM, any ATM, okay, and you withdraw the money. Second, you can use that ATM or debit card for the purpose of purchases also, okay. And money is there in your bank account. You are doing UPI. You have just purchased a vegetable of 20 rupees. What you will do? You will say, sir, bhaiya, where is the scanner? And you will just use the scanner and pay through your mobile phone. It means, is it a cash or not a cash? It is a hardcore liquid cash. Yes. So your cash comprises of cash on hand and demand deposits. What is demand deposits? Anytime when you demand the money, you will get the money. Okay. For example, money lying in your bank. Okay. So cash comprises cash on hand and demand deposits. Okay. What is meant by cash equivalent? Cash equivalent are short term. Short term means within 3 months. Short term means within 3 months. Cash equivalents are short term. Highly liquid investment. Short term, highly liquid investments. These are short term investment and highly liquid investment. that are readily convertible to non-amount of cash, that are readily convertible to non-amounts of cash, which are subject to an insignificant risk of change in value. So three things are very, very important in this cash equivalent definition. Three things are important. Please write down. Cash equivalent is equal to short-term, highly liquid, short-term, highly liquid, within bracket 3 months, plus non-amount, KNOWN, non-amount, plus no significant risk of change in value. Short-term, highly liquid, within bracket 3 months, plus non-amount, plus no significant risk of change in value. No significant risk of change in value. These should be the element. These should be the three element of your. These should be the three element of your cash equivalent. So what is the cash equivalent? Cash equivalent is equal to what? Cash equivalent is equal to short-term, highly liquid, 3 months, plus known amount, plus no significant risk of change in value. Plus no significant risk of change in value. Friends, for example, ABC Limited, a company, has invested in the equity shares of Infosys Limited. Okay. And they have invested 1 lakh rupees for purchasing the shares of Infosys Limited. Tell me whether this investment is short-term and highly liquid or not.
It's a short term, but it's not a
It will
highly
be cash.
liquid. It's a known amount should be known at the time of investment.
No,
the redemption
sorry. My question is not that is it a cash equivalent or not. My question is it a short-term, highly liquid investment? My limited question was that. So answer
No,
yes
sir.
or no.
No, sir.
No.
Friends, if you have invested in the shares of a listed company, right? And you have invested, if you want to share it today, when the market will open, you will able to sell the shares immediately, right? And you will get the money in T+1. The settlement happens at T+1. Okay. So it is highly liquid. The stock market is highly liquid, right? You have the share, you want to sell, you can easily sell. So investment in the equity shares are highly liquid. It is only listed company. I'm not talking about unlisted company. है या नहीं highly liquid?
Yes, sir.
आप जब भी बेचना चाहते हो बेच सकते हो. So a company invested in the shares of Reliance, Adani, Infosys, Tata Motors. So the company wants to sell. The company will be able to sell it immediately. The only thing is the market should open, right? For example, on Saturday, of course, the company will not be able to sell. On Sunday, the company will not be able to sell. But the company decided to sell on Friday evening. So it doesn't matter. The company will be able to sell on Monday. And what is the tenure I have told you for the short-term highly liquid? What should be the tenure? 3 months.
3 months.
3 months. If that asset has a capacity to generate cash or convert it into cash within 3 months, then it will be considered as a short-term highly liquid. Stock market equity shares, it just take a day, right? Maximum 2 days. But if you have invested in a shares of listed company today, okay, you want to sell it in the next week, you will be able to sell in the next week. But are you aware that what money you will get after selling these shares after a week? What will be the amount of those shares?
No, sir. It will be high or it will be low. Exact amount unknown.
If market will crash, you are not aware. You don't know. The price of the share will get down by 80%, 70%, 60%. You are not aware. You're not aware. Or probably vice versa. The price may be double also in just a week. If they will give the good performance, if there are some market sentiment, some great news will come, the company will get good order, the sector, there are some good government policy about that sector. So probably the price will double. So you're not aware about what money you will get. Doesn't matter high or low, doesn't matter upside or downside, but what you will get, you are not aware. Third, whether this investment has a significant risk of change in value or no significant risk of change in value.
Significant risk in change.
Significant
Yes,
risk of
there
change in
is
value.
risk.
Significant risk of change in value, right? That is why this investment in equity shares, is it a cash equivalent or is it an investment?
It's investment.
It's an investment. Second example, the company has invested in the fixed deposit of State Bank of India for 2.5 months. For 75 days, the company has invested in the equity shares of the company has invested in fixed deposit of State Bank of India for 75 days. For 75 days. So tell me, is it a cash equivalent or not a cash equivalent?
It's a cash equivalent, sir. Because
let's-
the
Yes,
period,
it is cash
Let's
equivalent.
understand all the three items. Number one, is it short term and highly liquid?
yes, sir.
Why? Because
Because
it is
it's
for
less than 3 months.
Less than 3 months. Number two, do you know what will be the redemption amount after 75 days? What will be the maturity amount after 75 days?
Yes, sir.
Yes.
Even it is printed on your fixed deposit receipt. Right. So when you make a fixed deposit, have you seen any FDR? Your own FDR, your family's
Yes,
FDR, your client FDR. Have you seen the fixed deposit receipt?
Yes, sir. I
Yes,
have
sir.
seen it, sir.
Right. If you have not seen, but I'm sure you have a bank account because you have received the stipend also, go open your account and do a fixed deposit of 500 rupees today, or let's say 100 rupees today. So when you do fixed deposit in with your online banking, it will show you this will be your maturity period, right? For example, if you deposit for 3 months, this will show you today is 31st July. Your redemption date will be 31st October, and you are depositing 500 rupees. You will get 545.80 paisa after on 31st of October. So your redemption amount is known. You know that what money I'll get, right? Whether this has a significant risk of change in value, whether this
No.
FD has a
No, there
significant
is
risk
no
of change in
risk.
value, no
No, sir.
significant, no
No.
risk of change in value, no risk of change in value, right? So friends, have you understood the meaning of cash equivalent? Cash equivalent are short-term, highly liquid investment which are convertible to non-amount of cash and which are subject to an insignificant risk of change in value. Friends, in comparison to accounting standard in the cash equivalent, you know what is the change? In our accounting standard 3, we were showing bank overdraft as a liability. Bank overdraft. You understood bank overdraft? When your current
Yes,
account
sir.
balances are overdrawn, right? It's like a working capital facility. For example, you have 10,000 rupees in your bank account and you have issued a check of 15,000 rupees. What will happen? The check will bounce or not?
So when we have the overdraft, it will not bounce, sir. It will cleared.
No, but if you don't have overdraft facility, then
Then it will bounce back.
it will bounce back, right? So this overdraft facility is kind of a facility. It's a kind of a borrowing, short-term borrowing, right? Current liability, short-term borrowing. So in our accounting standard 3, whenever we have a bank overdraft, right? So it's like a short-term borrowing. It is coming into the short-term borrowings in the balance sheet, right? It will be shown as a cash flow from financing activity. But para 8 of Ind AS 7 says that when your bank overdraft is part of your cash management activity and it fluctuates between positive and negative, means when you are using this bank overdraft as an integral part of your working capital management, right? And it is the balance is fluctuating, means today it is cleared, right? So you have used a facility of 5,000 rupees of bank overdraft. Tomorrow you will deposit the money in your bank, right? Then you issued a check of 12,000 rupees. It will get cleared. Okay. So there is a negative balance of 7,000. Then you deposit the money. So this balance fluctuates. Okay. The only purpose of this bank overdraft is whenever you are in short of money and up to the limit, up to the level which you have, which you have got the limits up to that level, your all the payments will get cleared. Doesn't matter whether you have the cash or don't have the cash in your bank account, right? So the standard says that this bank overdraft will also form part of your cash and cash equivalents. Bank overdraft will also form part of your cash and cash equivalents, right? Is that clear? Is that clear? So let me show you how it will be depicted in your cash flow statement. How it will be depicted in your cash flow statement. Let me show you. Right. I hope my Excel file is visible. I hope my
Yes.
Excel file is visible.
Yes, sir. Yes, sir.
Is it visible? So treatment of bank overdraft. Treatment of bank overdraft. Let me show you the treatment of bank overdraft. Okay. So let me leverage an example which I have taken earlier in my old class. Friends, this is the balance sheet. What we are discussing the treatment of bank overdraft. Okay, in the cash flow statement. This is the balance sheet. 31st March 25, 31st March 24. 1,000 rupees is the cash and cash equivalent. 70 rupees is the opening cash and cash equivalent. Closing cash and cash equivalent is 1,000 rupees. Short-term borrowings, bank overdraft is 80 rupees in this year end. In the beginning, it was 0, right? So now I need to prepare my statement of cash flows. I need to prepare my statement of cash flows. Okay. Cash flow from operating activity, assuming it is 200. I'm assuming, okay. Cash flow from investing activity, assuming I have invested 150 rupees in the investing activity. I'm assuming I have generated 800 rupees from the financing activity. What is the net cash changes from all the activity? 850 is the net cash changes from all the activities. What is my opening cash and cash equivalent? What is my opening cash and cash equivalent?
70.
70.
Opening cash and cash equivalent is 70. Opening cash and cash equivalent is 70. What should be my closing cash and cash equivalent? What is my closing cash and cash equivalent? Net cash changes plus
920.
Closing cash and cash equivalent. Closing cash and cash equivalent is 920. Normally, your closing cash and cash equivalent should tally with your balance sheet. Is it tallying with your balance sheet? Is it tallying with your balance sheet?
No, sir.
Why? Because your closing cash and cash equivalent in the balance sheet is 1,000, but in your statement of cash flow it is 920. Then you need to refer note 1. You need to prepare a disclosure, a reconciliation. You need to prepare a reconciliation. And what is that reconciliation? Reconciliation of cash and cash equivalent. Standard says that in your balance sheet, your cash and cash equivalent are only the asset side, only the positive numbers, right? Your bank overdraft is the short-term borrowings, but in your cash flow statement, you have to include your bank overdraft as a part of cash and cash equivalent, So what is my cash and cash equivalent as per balance sheet? I have to give this reconciliation. What is my cash and cash equivalent as per balance sheet? 1,000. What is my bank overdraft? 80. And this will be my cash and cash equivalent as per cash flow statement. This is kind of a disclosure, a footnote to the statement of cash flows. A reconciliation is required to be given in the statement of cash flows, right? In the cash flow statement. Okay. Is that clear, my dear friends? Is it clear or not clear?
Yes, sir. Clear, sir.
Clear, absolutely clear. समझ में आ गया बैंक ओवरड्राफ्ट का ट्रीटमेंट? So in the balance sheet it is a borrowing. Balance sheet में तो borrowing ही होगा. लेकिन in the cash flow statement it will become part of your what? It will become part of your cash and cash equivalent. Now I am asking a question. Can the cash and cash equivalent negative in your balance sheet? क्या आपकी बैलेंस शीट में कैश एंड कैश इक्विवेलेंट नेगेटिव हो सकता है कभी?
Yes, sir.
कैसे?
OD से, sir.
Again I am repeating my question. Can a cash and cash equivalent can be negative in your balance sheet?
No.
No, sir. Cash will be negative.
cash and cash equivalent can never be negative in the balance sheet. Question number 2. Can the cash and cash equivalent be negative in your cash flow statement?
The cash flow statement, it will be negative, sir.
It not will be, it can be negative. Right?
Can be, yeah.
For
It may-
example, you have zero cash and cash equivalent. In the balance sheet, maximum it can be zero, it cannot be negative. You have zero cash and cash equivalent. And you have the OD facility because the entire bank balance is overdrawn. You have 1,000 rupees, you have 5,000 rupees of OD facility. You have zero cash and cash equivalent. So what is there in your balance sheet? Cash equivalent 0, cash and cash equivalent 0, short-term borrowings, bank overdraft 5,000. But in your cash flow statement, what will be your cash and cash equivalent?
It will be minus 500.
Negative 1,000.
It will be negative 5,000. It will be negative 5,000. So let me show you. For example, let's say this is your 200 is your cash and cash equivalent, and 900 is your bank overdraft. Okay, 900 is your bank overdraft. So let me change the numbers here also. So what is your negative 700 now? So opening cash and cash equivalent is 70. Cash flow from financing activity is, let's say, minus. So we have to arrive at number of negative 700 ना, 630 लाना है अपने को. So minus 580 120 minus 820. Okay. See, your changes, your net cash changes during the year is negative 770. Your opening cash and cash equivalent is 770. Your closing cash and cash equivalent is negative 700. But in your balance sheet, it is positive 200. Positive 200. Okay. So why this is negative in your cash flow statement? Because of the bank overdraft. In your cash flow statement, your cash equivalent can be negative, but in your balance sheet, your cash and cash equivalent can never be negative. Is that clear? Is that clear?
Yes, sir.
Clear in mind or clear from mind?
Clear in mind, sir.
Clear in mind.
Clear.
Very good. So friends, we understood the concept of bank overdraft also. Okay. Now again, we'll go back to this cash and cash equivalent and let's discuss illustration number 1. Illustration number 1 from ICAI study material. From ICAI study material. Okay. Tell me what is the answer. Company has provided the following information regarding the various assets held by the company on 31st March. Find out which of the following item will be part of cash and cash equivalent. Cash and cash. It is asking cash and cash equivalent for the purpose of preparation of cash flow statement as per guidance provided in Ind AS 7. Fixed deposit with State Bank of India. 12% 3-year maturity on 1st January 2004.
No, sir. No, sir. It is not,
It is
not less than 3 months from the date of acquisition.
Yes. So 31st March 2001, we are looking at on the 31st March 2001. We are preparing our financial statement on 31st March 2001, and this is maturing on 1st January 2004, long term, not within 3 months. Okay. So is it a cash and cash equivalent?
No, sir.
No, it will be part of your investing activity, right? Fixed deposit with the HDFC Bank. 10% original term was for 2 years. 10% original term was for 2 years, but due for maturity on 30th June 2001.
This
Yes,
is
sir.
also no, sir. This is also no, because its the original deposit period is not less than 3 months from the date of acquisition. Even though it's look like from the reporting date is less than 3 months, it's not like that.
You are absolutely right. So friends, Ankit, while from the reporting date, it is within 3 months, but for the purpose of cash and cash equivalent, whenever you look at the fixed deposits, you will be looking the 3 months has to be from the original date of investment. Okay, the 3-month period, because when you have invested, are you aware about what money you will get after 3 months? So that is the concept. Original maturity. The original maturity should be 3 months. Okay, while it should be current asset, no doubt about this. It has to be a current asset, but it is not a cash and cash equivalent. It will come under other bank balances. Okay, right? It will be part of your investing activity. So why it is not a cash and cash equivalent while the period is 3 months, but not from the original investment. The period is 3 months from the date of reporting. Okay. Originally maturity period was 2 years. The only thing is 1 year, 9 months has already passed. So now only 3 months are left. Have you understood this point? So whenever we are looking at cash and cash equivalent from the fixed deposit perspective, we have to look at the original maturity period when it was originally invested. If it is up to 3 months, it is part of your cash and cash equivalent. If not, then if it is less than 12 months from the reporting date, it is part of your other bank balances current asset, but not the cash and cash equivalent. Is it clear or not clear? Any doubt? Geet, Mamta, Saurabh, Anushi, any doubt on this? So it is not a cash and cash equivalent. It's clear? It is not a cash and cash equivalent. Okay. Redeemable preference shares in ABC Limited. Redeemable preference shares in ABC Limited. Acquired on 31st January 2001 and the redemption is due on 30th April 2001. The original maturity is 3 months.
Yes, sir. It is a cash and cash equivalent because
Cash and cash equivalent, sir.
it's less than 3 months from the date of acquisition.
Is it a cash and cash equivalent, guys?
No, sir, because this is a shares.
It's a redeemable preference share, sir. That the redeemables means the known amount is very well known. It's a fixed.
It's not an equity share, it's a redeemable preference share. Tell me whether redeemable preference shares.
Yeah, it's a cash, sir. If it is a share, equity, ordinary shares, then it is no.
Yes, it is a preference share. In the preference share, the amount is fixed. Okay, the amount is fixed. So it has to be included as due within 90 days from the date of acquisition. Right? Yes. What is the next one? Cash balances at various banks.
It is obvious, sir. We got
It is cash and cash balance. Yes, cash balances at various banks, all branches of all banks in India. It's a cash balance. It doesn't matter. Cash balance at various banks, all branches, all international branches of Indian banks. हमारा बाहर की branches में पैसा पड़ा है. Is it a cash and cash equivalent?
Yes, sir.
Yes,
Even
sir.
though it is international, it is allowed. But if there is a restriction to receive the money from there, any local government restriction or policy changes, then we need to give the disclosure.
Yes. Yes, you are right. So if there is a restriction, for example, you are not aware. For example, whenever you want cash, you have to file some letters, formalities. It will take around 6 months. Then it is not a cash and cash equivalent. Okay. Cash balances at various bank branches of foreign bank outside India. Branches of foreign banks outside India.
Yes, sir.
Again, yes.
Yes.
It's a cash and cash equivalent until and unless there are some restrictions in the retrieval of the cash, in the expatriation of the cash, right? Bank overdraft of SBI Fort branch, temporary OD, which is payable on demand. Bank overdraft.
Yes, sir. It is included. This is what we did. This is what we discussed earlier, sir. In this case, if it is a part and parcel of the business.
Yes. So generally, it is part and parcel of your working capital management only. Treasury bills, 90 days the maturity. Treasury bills, government securities. Yes.
Yeah, we can include it. Yes,
it
sir.
is a part of your cash and cash equivalent. This is your study material question. This is your study material illustration number 1. This is your study material question, right? Can you see your study material on the screen?
Yes, sir.
Yeah. So this is what we have covered, right? This is what we have covered. Cash and cash equivalent. Okay. Let me go further. So this is the answer. Presentation of cash flow statement, operating activity, investing activity, financing activity. We have covered this. Operating activities are principal revenue producing activity of the entity and other activities that are not investing or financing activity. Investing activity, acquisition and disposal of long-term assets and other investment not included in cash equivalents. Means if there is a 3 months fixed deposit, where it will go? Where it will go? Cash equivalent. It will go to cash equivalent. But if it is 12-month fixed deposit, where it will go in the cash flow statement?
It will be in investing activities.
It will be
Investing
investing
activity.
activity. It will be investing activity, right? So if there is a 3 months deposit, it will form part of your cash and cash equivalent. It will not go in the investing activity, right? But if it is a more than 3 months fixed deposit, it will become part of investing activity. So investing activity is acquisition and disposal of long-term assets and other investment which are not form part of cash and cash equivalent. Investment in equity share. Is it a cash equivalent or investing activity?
Investing activity.
Investing activity. Right? Investing activity. But investment in redeemable preference share within 90 days. For a period of 90 days.
It is a cash and cash equivalent.
Cash and cash equivalent, it will go at the bottom of the cash flow statement. It will not part of investing activity, right? So that is why this term has been used, not included in cash equivalent. Financing activity. What is financing activity? Activity which result in the changes in the size and composition of equity and debt of the entity. So financing activity is related to the equity and debt of the entity, equity and borrowing of the entity. So operating activity, what is operating cash flow, which indicate the operations of the entity, and the entity have generated sufficient cash flow to repay loan, maintain the operating capability of the entity, etc. Okay. So आप अपना loan वोन कहाँ से repay करते हो? So you purchased a car and you don't have 10 lakh rupees upfront. So you bought the car, you purchased the car on EMIs by taking a bank loan. So you will earn money and you will pay EMIs. So your cash flow from operations will meet your obligation towards your liabilities, right? So you will repay your loan from the money which you are earning from the business, yes? Or you will be investing from the money which you are earning from your business. So what is your cash flow from operations? Cash receipt from customer for sale of goods and provision of services or account of royalty, fee, commission, cash payment to vendor or suppliers, cash received or from or paid for financial instrument held specifically for trading purposes. These are the examples of operating cash flows. Now let's discuss with illustration number 2. Let's discuss, okay, and let's discuss from the ICAI study material. Illustration number 2. Is it a cash flow from operating activity or not? Friends, receipt from the following transactions, identify which transaction will be qualified for the calculation of operating cash flows. If company is into the business of trading of mobile phones, what is the nature of the business of this company? Trading of mobile phones. Trading of mobile phones. Right?
Purchase and sale of mobile phones.
Purchase and sale of mobile phone. Trading of mobile phone is the business of the entity. There are 13 activities which are given, and we need to identify that which activity is a operating activity, right? So the cash which is coming in or cash which is going out, is it a part of the operating activity or not? That we need to identify. Okay. Yes. Receipt from sale of mobile phones. Receipt from sale of mobile phone. Is it a operating activity or not operating?
Yes, sir. Operating activity, sir.
Operating activity. It is a operating activity. Yes. Purchase of mobile phones from various companies. You are paying money. You are purchasing your mobile phones.
If it is on cash, then it is a purchase operating activity.
Assuming it is on cash. Yes.
It's operating, sir.
It's a operating activity. Employee expense paid.
Operating activity.
Advertisement expense paid.
Operating.
Credit sales of mobile.
This is a non-cash.
This is a non-cash item. So credit transaction will not be included in cash flow. Okay. Right. So receipt from customer will be included. While when you prepare your cash flow statement, you will adjust your, you will adjust your purchases with the creditor balances. But net, why you are adjusting? You are adjusting because the money has not been received. Right. So credit sale of mobile, it will not be included in your cash flow from operating activity because you got the mobile, you haven't paid the money. So there is no movement of cash. Or you sell the mobile but you haven't received the money, there is no movement of the cash. Miscellaneous charges received from customer for repair of mobile.
It's operating item.
Operating activity. Loss due to decrease in market value of the closing stock of mobile phones, old mobile phones. Market
it's
value गिर गई, loss हो गया, impairment
No,
loss हो गया.
okay, it's a non-cash, sir.
It's a non-cash item. It's a non-cash item, right? It is not a cash item. It is a non-cash item, non-cash transaction. It is not a operating activity item.
So one quick question. So when we do changes in working capital, does increase or decrease in creditors affect that?
Does increase or decrease in creditor?
Affect the changes in working capital?
Of course, yes. Of course, yes. Because
So
what happened? So let me tell you what happens. You start with your profit before tax, right?
correct. Yeah.
So let's say you have done the credit purchases. Assuming a
Yes.
small example. So
Yes.
when you have done your, or let's take an example of credit sales because that will be easier to understand. So
Yes.
you have done entire sales as a credit sales. You remember the first example which I have shown you,
Yes.
and I have
Yes.
told you the relevance of the statement of cash flow.
Yes.
So when you have done the entire money as a credit sales, whether it will come into your revenue by accrual principle? Yes.
Yes.
आपके P&L का part होगा? Yes.
Huh.
So through P&L, whether it will come to your bottom line, profit before
Yes.
tax, yeah?
Yes.
So your profit before tax has included an element where where the money has not received, but the sales has recorded. Correct? Because of
Yes.
accrual basis.
Yes.
So then you have to do two kind of adjustment, non-cash item and non-operating item, and it's an operating item. There is nothing called a non-cash item. Then what you will do, then you will adjust your operating assets and liabilities, adjust your working capital. So if you have done the entire sale as a credit sale, what will happen? Your debtor will shoot up. आपके
Yes.
debtor बढ़ गए होंगे ना?
Sir.
So then you will do the adjustment of increase in debtor. So if it is an increase in debtor, it will be a negative cash flow.
Correct.
So you remember my first question on this on this Excel file. I have shown
Yes.
you ना direct method, indirect method दोनों से दिखाया था ये वाला
Yes.
debtor,
Yes.
right? So
Yes.
what we did, we have increase in current asset, increase in debtors, increase in debtors. We have made it negative. And
Yes.
that's how we arrived at a negative 60 of cash flow from operation, which is evident from this direct
Yes.
method also, right?
Yeah.
If you would not have adjusted this, then what happens? Then you will find your positive cash flow, and it is not positive at all. Your cash flow of 28 rupee is equivalent to the profit after tax, which is not right. Correct?
Okay. Yes.
And why this adjustment is required in the indirect method? Because you are starting from a profit which is prepared on an accrual basis.
Correct. So in my question is like I was just confused whether that is like to identify the operating item or to identify whether this is part of cash flow from operations. So that's where I was confused.
Yeah. So
Like,
basically, yes, you are
so in this
absolutely right.
case, we would be adjusting this fifth one as well in the operating cash flows.
Exactly. So the intent of the question in the study material is to judge you when you have in isolation. If somebody is asking you, is it a part of operating activity or not? Is it a cash from operating activity or not? So in isolation, they are asking this. Then you can just write your comment, right? You can write your comment that no, why no? For example, credit sales of mobile. No, it is not a cash from operating activity because there is no cash transaction. There is no cash movement happened, right?
Correct.
So
But
the
we can
crux,
write it, but it would be still part of while calculating cash flow from operations. It would be still
because this impairment loss also. So while it is an impairment loss, but when you prepare your cash flow from operating activity, this is a non-cash item. Your profit has already reduced from this non-cash item. You will add back your profit, just like depreciation you are adding back. आप करते हो ना non-cash item का adjustment.
हाँ sir.
तो इसका भी adjustment करना पड़ेगा. But it is not an operating item, right?
Oh, got it.
Okay.
Thanks.
So this
payment
question is like based on direct method, no?
based on direct method. Yes, absolutely right. Yes. Payment to supplier of mobile phones.
It's operating activity, sir.
Operating item, right? Depreciation on furniture of sales showrooms.
It's a
Non-cash item.
non-cash item.
Non-cash.
Non-cash.
Depreciation is a non-cash item. Interest paid on cash credit facility of the bank, on CC limit of the bank. Interest paid.
It is a financing activity.
It's a financing activity. It's a financing activity. Okay. So it will not be an operating activity. Profit on sale of old computers and printers in exchange of new laptop and printer.
No, this is a non-cash, sir. Because
This is a barter transaction. So profit on sale of old computer and printer in exchange of new laptop and printer. Right. So the money movement is not there. While even if it will be there, it will be part of your investing item. It is not an operating item. And in this case, there is no exchange of money, as well. Right. It is not an operating item, and it is a non-cash item. Okay. Advance received from customer.
it's an operating activity.
Operating activity relating to the business. Sale tax and excise duty paid.
This is also relating to business, operating.
Again, it is related to the business. It is an operating activity, right? It is an operating activity. Is that clear to everyone? Is it clear to everyone? See, even in the answer, in the solution, the explanations are given, right? That why it is included, why not included, right? Is it clear to everyone?
Yes, sir, it's clear. Even I was under the confusion that why we are decreasing and increasing that working capital changes in the cash flow from operating items while we're doing.
Now it is clear.
And now it is clear that because it is including accrual concept we are following in the profit and loss account. So profit before tax we are using
Exactly.
it. So
Exactly.
it included in it. So we are eliminating that.
Yes.
That's very nice, sir. Thank you so much for that.
Okay. So there are two methods. Direct method, it includes major class of gross receipts and gross payment of cash are disclosed. Indirect method, net profit or loss is adjusted for the effects of transaction of non-cash nature or income or expenses associated with investing or financing cash flows, right? तो आप क्या क्या एडजस्ट करते हो नेट प्रॉफिट और लॉस में? नॉन कैश आइटम करते हो और नॉन ऑपरेटिंग, विच इज इन्वेस्टिंग एंड फाइनेंसिंग, राइट? Is it clear? From the
Yes,
cash
sir.
flow from operations by direct method and indirect method from the following. So find out the cash flow from operations, right? So now it is asking a question on direct method. This is one of the study material question. Find out the cash from operations. You need to find out the cash from operations either by direct method and indirect method from the following information. Answer would be same. Doesn't matter it is direct method, indirect method, answer would be same. So let's prepare the cash flow from operating activity by direct method as well as by indirect method. Okay. By both the method, let's prepare the cash flow statement. So in this question, the profit and loss of ABC Limited is given. And what is given? Sales are given. Cost of goods sold are also given. Admin and selling overhead. Depreciation. Is there any role of depreciation in the direct method?
No, sir.
No, sir.
Interest paid is a of course direct method. It's a cash, but it is a non-operating item. Loss on sale of asset, again it's a non-operating item. Profit before tax is 83,000. Tax is this much. Profit after tax is this much. Okay. Then what is given further? The balance sheet is also given, right? How will you prepare your cash flow statement? All the line item of balance sheet and P&L should be ticked. Okay. All the line item balance sheet should be ticked. And why P&L? To identify the non-cash item and the non-operating item. Okay. So balance sheet is also given. Your P&L is given and balance sheet is also given. Your PP is given. 65,000 was the PP. It becomes 75,000. Investment from 10 to 12. Inventory from 13,000 it will become 12,000. Means there is a sale of inventory. Trade receivable from 7,000 it has gone up to 10,000. It means less money have been received. Cash and cash equivalent 5,000 to 6,000. Shareholder fund 50 to 60. Non-current liability 35 to 33. Trade payable 8,000 to 12,000. The trade payable has increased, means more purchases, less money paid to them. Payable for expenses 7 to 10,000, means expense has incurred but the money has not paid to them, right? P&L and balance sheet is clear. P&L and balance sheet is clear to everyone. Yes or no?
Yes, sir.
Yes, sir.
Clear.
Now we need to prepare the cash flow from operations by direct method. By direct method means what is your cash collected? Cash collected from sale of goods. So what is the number of sales which is given? What is the amount of sales which is given? क्या
5 lakh.
amount क्या? 5 lakh. So if I have made a sale of 5 lakh rupees, okay, just wait for a minute. Yes. So what is your sales? What is your sales? 5 lakh rupees. Whether sales are important or cash collection is important in the direct method.
Sir, cash collection is important.
Indirect
Cash
method
collection is
cash.
important. Yes. Sales are 5 lakh. Now we need to look at debtors to arrive at the cash, right? What is my trade receivables? What is my opening trade receivable?
Opening 7,000,
7,000.
closing 10,000.
7,000 is my opening trade receivable, 7,000 rupees. And how much sales I have made, assuming the entire money is on credit?
1,000.
Huh?
5 lakh.
So opening money receivable from the debtors are 7,000. The sales which I have made to the debtors on credit is 5 lakh. What is the total money I would have received from the debtors? The total money including opening?
5 lakh 10,000.
5 lakh
5 lakh
7,000.
7,000. 5 lakh 7,000. I'm talking about the opening
Yes,
to be
yes, sir, yes,
received
sir.
plus sales. 5 lakh 7,000. So my closing balance of debtor would have been 5 lakh 7,000. But what is my closing balance of debtor?
It will be
10,000.
10,000.
10,000. What does it mean?
10,000.
It means that we have only 10,000 data, less are
497
received.
received.
Yes.
Sir,
It means except 10,000, entire money has been received. 4,97,000 has been received. So what is my cash collected from debtors? What is my cash collected from customers? 4,97,000.
497.
So are you clear on this 4,97,000? Cash sales,
Yes, sir.
4,97,000. Sales 5 lakh. Opening receivable 7,000 minus closing receivable 10,000. So 4,97,000. Now cash collected from debtor over. Now we
Sir.
need to find out the.
Sir, which means the increase in the 3,000 is a credit sales.
Yes, increase in 3,000 is credit sales. Yes, right. So this is a direct method. This is a direct method we are only showing. We will also prepare through cash flow and indirect method also. Okay. Yes. Now in the direct method, you have shown cash collected, then cash paid. Cash paid to supplier, cash paid to employees, right? The others as well. So what is your cash now? Let's go to the P&L. In indirect method, P&L is more important, first of all. So what your cost of goods sold? Your cost of goods sold is 3,50,000, right? 3,50,000 is your purchases, is your cost of goods sold. But is it a cash payout? 350 is your P&L item. Is it your cash payout? Answer is no.
sir.
You need to
sir.
just compare with the creditors. 3,50,000 you have made the purchases. Now what is your creditor balances? Your creditor Your creditor was from 8,000, it has gone up to 12,000. So 3,50,000 worth of goods you have received on credit. 8,000, the opening balance you are required to pay, 358. But your closing balance would have been 358, but it is only 12,000. What does it mean? The balance money you have paid? हाँ या ना?
Yes,
इसका
sir.
मतलब यही है ना? Your cost of goods sold is 350. Okay. 8,000 is the opening balance. 12,000 is the closing balance. This you have to reduce. And inventory also. Inventory भी तो देखना पड़ेगा ना, कुछ बची भी तो होगी inventory.
Yes,
तभी
sir.
तो आपकी actual purchases भी निकलेगी. What is your inventory balances? This is your creditor balances. Your inventory balances is 13,000 and 12,000. Yes, your inventory balances. Yeah. So your inventory has also reduced. मतलब कुछ आपने opening inventory भी use कर ली. So it is on accrual basis. When you use the opening inventory, it will show into your P&L, right? So क्या करेंगे हम? इसमें क्या करेंगे? How will I compute my net cash flow? So 350 is my expense, purchases expense on an accrual basis. My closing inventory is 12,000 and my opening inventory is 30,000. So I will add my closing less my opening inventory. So I have arrived at the purchases during the year.
Yeah.
Is this clear? Purchases during the year. How much purchases during the year? Is it clear or not clear?
3,49,000.
Yes, sir.
Yes, sir.
Yes,
Clear.
sir.
अगर आपने परचेजेस की होती और वो पूरा का पूरा आपका माल स्टॉक में पड़ा होता, इन्वेंट्री में पड़ा होता, तो क्या आपके P&L में आता? नहीं आता ना,
No, sir.
है ना? So because it is prepared on an accrual basis, it will shown as an asset in your balance sheet. So now 349 is the amount which you have purchased during the year. Then you have to pay 8,000 of opening balance also, but 12,000 is lying as a outstanding balance. It means 349 plus 8 minus 12, 3,45,000 is the money you have paid to your creditors, right? So this is what it will go as a payment to creditors. Cash purchases 3,45,000. What about overheads? Depreciation is not a cash item. Interest paid is not a finance operating item. Loss on sale of asset, again not a cash item. Your administrative and selling overhead 55,000. So 55,000 is the expense. But there is a payable also. 7,000 was the opening, 10,000 is the closing. Means 55 plus 7 minus 10. What is the amount? What is the amount? 55 plus 7 minus 52,000. So 52,000 is the overhead which is paid. 52,000, right? So this is how this is prepared. 1 lakh less tax which is there 30,000. 70,000 is your cash flow from operations. Yeah, cash flow from your operating activity. Okay. Now let's prepare from indirect method. What is my indirect method? What is my indirect method profit? What is my profit before tax?
83,000.
83,000.
83,000 is my profit before tax. So in this question, it has started with profit after tax. So what you can do, you can also start with profit after tax. अगर profit before tax से start करोगे तो last में आप इसको less कर दोगे tax को, right? So let's assume profit after tax 53,000. यहीं से start कर लेते हैं, right? So my profit includes my sales, purchases, everything. So now I need to adjust my non-cash item. What is my non-cash item?
Depreciation.
Depreciation, loss on sale of asset.
Depreciation and loss on asset also, right? So what
Yes,
I
sir.
did, depreciation, loss on asset, and there is a non-operating item which is interest paid. I have added back this item also, right? So up to this part, I got my cash flow from operating activity before changes in working capital. Yes. So now I need to adjust my working capital. Why? You understand now? Increase in asset, increase in liability, decrease in asset, decrease in liability, right? I need to adjust now.
Yes, sir. That was very much clear.
So decrease in inventory. There was an inventory which was decreased from 13 to 12. So decrease in inventory means inventory कम हो गई, मतलब inventory बिक गई, right? So decrease in inventory will add the cash.
Yeah, cash is received on selling it.
Increase in trade receivable. Your trade receivable increased means your money has blocked. So
Blocked.
negative 3,000.
Yeah.
Increase in trade payable. Your liabilities have increased means you haven't paid money. So
Plus
we
this
have
4,000 is added. Increase in payable for expenses 3,000. So what is your closing cash flow from operating activity? 70,000. And what was your cash flow from operating activity under direct method? Same 70,000. So cash flow from operating activity is 70,000, same from direct method as well as indirect method. Okay. I hope this is clear to everyone, my dear friends. Is it clear to everyone?
Yes, sir.
Okay, very good. Yeah. So friends, it's 8:30 now. Let's have a 10 minutes break and we will start at 8:40. Okay. increase in deferred tax asset or liability is also affected in the cash flow statement? Answer is no, Miruna. Okay. Yes. Deferred tax asset is again a notional concept, and you are starting with profit before tax. Okay, that is why your deferred tax expense or income is not part of your profit before tax, and hence you are not doing any adjustment. Okay, you are only doing the adjustment for current tax. Investing activity. What is investing activity? We have already discussed. It represents the extent to which expenditure have been made for resources intended to generate future income and cash flow. Means investment in the long-term assets and investments which are not cash in cash equivalent. For example, cash payment to acquire and cash receipts from the disposal of fixed assets, intangible, other long-term assets, including capital work in progress. Cash payment to acquire and cash receipts from the disposal of debt and equity instruments of other entities, not own entity, other entities. Cash payment to acquire and cash receipts from the disposal means is investment in equity shares, investment in debentures, investment in mutual funds, right? It is talking about those investment which is made in other entities equity instruments, right? So ये बड़ा technical word लिखा हुआ है, but what is the meaning of this second paragraph? Investments. Okay. Cash advance and loans given to other parties and their cash repayments. If you have given a loan to the other party, is it an investing activity or financing activity? Loan given.
Investing.
It's investing activity.
Loan given is an investing activity, but loan taken, then
Finance.
Loan taken is a financing activity.
Financing activity. It's a borrowing, financing activity. Very good. So cash payment and receipt from future, forward, option, swap, unless they are held for trading or are classified as financing cash flow, right? So cash flow from the hedging instrument, these are also investing activity, right? Now, you need to tell me, is it a investing activity or not? So let me again use my study material for this illustration number 3. From the following transaction taken from a private sector bank operating in India, identify which transaction will be classified as operating and which would be classified as investing activity. In this example, there is one of the important line, one of the important word is there in the first line. You know what is that important word?
It is private sector bank.
It is a bank. It is a bank.
Bank.
Right. It is a bank. So you need to call out, you need to tell me for this bank, what will be operating item and what will be investing item, right? So tell me, the loan given, right? So giving a loan and getting a money, interest, receiving an interest on loan.
It's all operating activity.
It is operating activity.
Whether it is a investing or operating for the bank.
It's a operating. It's a main business is that giving loan and receiving deposit and paying interest and receiving interest is a main activity of the bank.
Yes. And what is the definition of operating activity? Operating activity is a revenue producing activity of the entity. It is the main ordinary activity of the entity, main bread and butter of the entity, right? Main revenue producing activity of the entity. Means if it is a bank, what is the main revenue producing activity? Giving a loan, getting an interest on a loan, right? These are the main revenue producing activity. So friends, interest received on loans, is it operating or investing for this bank?
Operating.
Operating, sir.
Interest paid on deposits.
Operating.
Right? Because the customer has deposited the money into the bank and the bank is paying interest on the deposit, while deposit is a liability for the bank, right? So, but it is the main operation. For the other entity, if the other entity has taken the money as a deposit, then that will be like a financing activity. But for bank, it is a operating activity. Deposit accepted.
Operating.
But
Is
if it
also
would,
operating.
but if it would not be the bank, अगर ये bank नहीं होता, then
Financing.
financing.
Then financing activity.
Deposit accepted means liability, right? So
Liability.
loan given to customer.
Operating.
Operating.
But if it would not have been the bank, then
Investing.
investing. Very good. Loan given is an investing item, but here it is a operating item. Loan repaid by the customer.
Operating.
If it is a non-bank, then investing. Loan given is investing. Money received from the loan which you have given. So money received is investing again. Deposits repaid.
Operating.
For non-bank.
Deposits repaid. Financing.
Deposit taken financing, deposit repaid financing. So proceeds of loan and repayment of loan both are financing. Commission received.
It's operating.
Lease rental paid for various branches.
It's operating.
It's
also operating.
Lease rentals paid for various branches. It's a operating. Service tax paid.
Operating.
It's operating.
Service tax paid is the operating.
Sir, your slide is not moving, sir.
Yes, I think it is stuck while I was able to see, but you guys were not able to see. So deposit accepted, loan given to customer, loan repaid by the customer, deposits repaid, commission received, lease rental paid for various branches, right? Okay. Yes. Then your, just a minute. Service tax paid.
Operating.
Operating.
Furniture purchased for new branches.
It's an investment.
Investing activity. Implementation of upgraded banking software.
Investing.
Of upgraded
Investing activity.
It's an investing activity.
Purchase of shares in 100% subsidiary for opening a branch in Abu Dhabi.
Investing.
It's an investing activity.
It's a strategy. It's a strategic investment, investing activity. New car purchased from Honda dealer in exchange of old cars and remaining amount paid in cash.
Investing.
Whatever the remaining amount paid.
Whatever cash paid, of course, it's an investing activity. Whatever cash paid, it will come into the cash flow statement.
Yes, sir.
Provident fund paid for the employees. Operating. Issued employee stock options.
Financing.
While if any money will be received, then it will be financing. But issuance of a scheme.
Flow of money.
No cash flow in
No
case of issuance scheme. So not to be considered. Okay. This is what it is also given in the answer, right? Is this clear?
Yes, sir.
Yes, sir. Crystal clear.
Now coming to the financing activity. What is the financing activity? Is result in the change in the size and composition of the equity and debt, equity and borrowing, right? So this financing activity is relating to the capital structure of the entity. Okay. So cash proceeds from issuing shares or other equity instrument, right? When the company is issuing shares, right? Issue of equity share, it's a financing activity. Buyback of shares, financing activity. Right issue, financing activity. Dividend paid, financing activity. Borrowing taken, loan taken, financing activity. Loan repayment, financing activity. Interest paid on loan, financing activity. So these are the financing activity, right? So all these things are which is given here. Payment by a lessee for reduction of the outstanding liability of a lease. Friends, I don't know you are aware or not, but are you aware about Ind AS 116? Do you know Ind AS 116 leases?
Yes, sir.
Okay. When I'll teach you that standard Ind AS 116 says that whenever you have entered into any lease liability, lease arrangement, you have to capitalize right of use asset on one side of the asset, and on the another side in liability, you have to recognize lease liability. And friends, this leasehold obligation is just like a debt. So whenever you are making any repayment of that lease liability, it will form part of the financing activity. Who has said this? Ind AS 116 has said this, right? Ind AS 116 has told that repayment of lease liability in accordance with Ind AS 116 will form part of your financing activity. Right? Is it clear?
Yes, sir.
Yes, sir.
Very good. So friends, now let's discuss what is the financing activity. So let me again take you to the study material and let's discuss from there. Illustration number 4. From the following transaction taken from a parent company having multiple businesses and multiple segments, identify which transaction will be classified as operating, investing, and financing activity. Now complete cash flow has come. Tell me, what is operating, what is investing, what is financing? I hope my study material is visible. Is it visible?
Yes, sir.
Yes, sir. Visible, sir.
Issued preference share. The company has issued preference shares.
Financing.
Financing.
activity.
It's a financing activity. The company has not invested in the preference share. The company has issued preference shares. Means company has raised the money by way of issuance of preference shares. Right? It's a capital structure. It's a capital structure of the entity. Correct? Clear है ना?
Yes, sir.
कंपनी ने
Yes,
पैसा
sir.
मार्केट से उठाया है, पैसा उठाया, परचेज द शेयर ऑफ 100% ऑफ सब्सिडरी कंपनी.
Investing.
It's investing activity.
Investing
activity.
activity. Dividend received.
Investing.
Investing activity. Dividend received from subsidiary, dividend received from other company.
It's all investing.
It's all investing. Doesn't
Investing
matter
activity.
from own subsidiary or from other company. It is all investing. Bonus share issued.
Not a cash.
Non-cash item.
In bonus share, there is no movement of cash.
No
It's
cash
a
involvement.
non-cash item. It's a non-cash
No
item.
cash
If
involvement.
there would have been the involvement of the cash, then financing. But bonus share mein there is no movement of cash. It's a non-cash item. Purchased license for manufacturing of special drugs. Means
Investing.
intangible asset
It's
purchase.
Investing
It's
activity.
investing.
Investing. Royalty received from goods patented by the company. Royalty received.
It's
Investing.
operating.
It's a operating money received from the customer,
Operating.
from the fee, commission, sales, royalties, etc. Rent received from the let out building, and letting
Invest-
out is not the main business. Rent received.
Letting out is not a menace,
Investing.
means it's an operating activity.
Sir, investing.
No. Just letting out is not main business. It's a investing activity, sir.
Investing activity. It's investing activity because it's not the main business. So the company has invested in an investment property, and from the investment property, the company is earning the rental income. It's a investing activity, right?
Yes, sir. If it is a letting out is a main business, then it is investing.
Then operating activity.
Then operating.
Point number 9. Interest received from loans and advances given. Interest
Given
received.
it's a investing.
Investing activity.
And if this entity is a bank, then
It's
Then
operating.
Then operating.
Then operating activity.
operating activity. Very good. Yes. So point number, which one is there? Point number 10.
10.
Dividend paid.
Financing.
It's a financing activity.
If it is a bank, then
Then operating.
It will be financing only.
Bank
Then
also
also
bank also is a financing
financing
activity. Their main business is not trading shares, right?
so doesn't matter it is a bank or non-bank, dividend will
Finance.
always be paid. Dividend will always be paid on the equity share, on their own equity shares, right? So both, if both have raised equity share, it will always be a financing activity. Okay. So issuance of equity share is a financing activity. Dividend paid on equity shares are financing activity. Dividend paid is a financing activity, right, Anushi?
Yes, sir.
Okay, perfect. Yes.
Yes, sir.
Interest paid on security deposits. Interest paid on security deposits.
Financing activity.
Financing activities, sir.
Financing activity. Very good. Purchased goodwill. You have paid for
Investing.
goodwill.
Investing.
Intangible asset, right? Point number 13. Acquired the assets of a company. The company has purchased the assets by issuance of equity shares, not parting any cash.
Non-cash
It's a
item.
non-cash
Non-cash
activity.
No
item,
impact on cash flow. It is
not to be
non-cash item,
considered.
butter kind of
Interim
thing. Yes.
dividend paid.
It's a financing
Financing.
activity.
Doesn't matter it is interim
Financing.
dividend or final dividend or special dividend, it is a dividend. It's a financing activity. Dissolved 100% subsidiary and
Investing
receive the
activity.
amount in final settlement.
It's an investment activity. Investing.
It's an investing activity, right? So friends, as I told you, this bonus share issued acquired the assets of a company by issuance of equity shares without paying any cash. These are the non-cash item. Of course, if these are the non-cash item, this will not form part of your cash flow statement. Whether any disclosure is required for the non-cash items? Yes, the disclosures are required. If the company is issuing bonus shares, if the company is purchasing the assets by way of issuing shares or by way of barter transaction, right? In that case, the disclosure is required that yes, these are the non-cash transaction which is made by the company. Okay. I hope you guys are now very much comfortable on this operating activity, investing activity, financing activity, direct method, indirect method, cash and cash equivalent, structure of the cash flow statement, right? Your non-cash item, non-operating item, changes in the working capital assets and liabilities, your profit before tax, add non-cash item, non-operating item. So your operating profit before changes in working capital, then change in assets and liabilities, then cash flow from operation, less taxes paid, then the cash flow from operating activities. I hope you guys are too much comfortable by now, because this cash flow statement is not a new concept. This concept we are reading, we are learning, we are looking at since last 2-3 years. Yes or no?
Yes,
Any
sir.
doubt, any
Perfect.
problem up to this level? Any doubt, any problem?
No,
Whether everything is
sir.
clear in mind?
Crystal
Any
clear.
question? Priya, any question? Neha, any question? No, clear in mind, sir. Very good. So clear in mind, not clear from mind, clear
Hi,
in
sir.
mind. Yes, this is what we discussed. If it
Sir,
is
I
a
have a doubt.
financial, you have a,
I have a doubt, sir. Like
yeah.
in one example you told, no, like by investing in preference share for the period of 3 years, sorry, three months, so it is cash equivalent. So my doubt is like how it could be. Like it is little risky, no? Suppose in the case of company is winding up, so first will be paid to outsider, then only it will be paid to preference shares and equity shares.
So basically, even you have deposited money into the bank and that bank will become bankrupt, then what you will do? So whenever you are, drafting any accounting standard or Indian accounting standard, whenever you are finalizing the accounting treatment, it has to be in the normal course of business, right? Even though if you are saying that the company is in the winding up, it means your going concern is jeopardized. Your going concern is impacted, right? So in that case, even that company will, the fundamental accounting assumption, which is going concern, that it is a revertible assumption that going concern will always be there. So the fundamental accounting assumption will be impacted, right? So in these kind of scenario, these are the extraordinary scenario. These are not the normal scenario, right? So these kind of scenarios should not be taken into consideration while finalizing the normal accounting treatment. अब ग्लोबल ट्रस्ट बैंक था, एक बैंक, वो भी तो बैंकरप्ट हो गया था, ग्लोबल ट्रस्ट बैंक. सो जितने लोगों की फिक्स डिपॉजिट थी, उसके बाद गवर्नमेंट एक इंश्योरेंस लेके आई कि आपको अगर आपकी किसी नेशनलाइज्ड बैंक में फिक्स डिपॉजिट है, so there will be an insurance up to 1 lakh rupee or up to 5 lakh rupee. For example, if you have a fixed deposit of 15 lakh rupee in a bank, that bank will become bankrupt, then you will be entitled to receive your money in the tune of 5 lakh rupees only, not the entire 15 lakh. So these are the very extraordinary circumstances, right? So these accounting treatment are on the basis of normal circumstances, right? Is that clear?
Yes, sir. Yes, sir. Clear. Thank
Yeah.
you.
Otherwise तो सबके लिए applicable होगा. Correct? Yes. So this part we have discussed. Interest received. If it is a financial institution like bank, it is operating activity for other investing activity. Interest paid. It will be operating activity for financial institution, but for other financing activity. Dividend received, it will be operating activity for financial institution because they are doing a lot of investments, right, for the purpose of their business. Okay. But for other entities, financing activity. Dividend paid on equity share. This is financing activity for both the entities. Okay.
Sir, I'm still having question on that dividend received. How come it will be operating activities for financial institutions, sir?
So because they have always surplus funds and they used to invest in a lot of instruments, right? They used to invest in mutual funds. They used to invest in the other companies' equity shares. Okay. So this investment is part and parcel of their operations because they have a huge investments in terms of they are depositing in liquid funds, right? So that is why it become an operating activity for them. Okay. This is their part and parcel because there are a lot of instruments in which they are investing, and this is how they are getting a dividend also, right?
Which means investing is also one of the main activity of the bank.
Yeah. Yes. This is the primary activity as per their memorandum of association. क्योंकि उनको आपको रिटर्न भी तो देना है ना. So bank is also taking a deposit from you, 7%, 8%, 9%. So how bank will give you those kind of returns? Bank is also investing in the equity securities. Bank is also investing in the gilt securities. Okay. Yes.
Right, sir. Thank you, sir.
Let's discuss one of the example from the Institute study material. A firm invests in 5-year bond of another company with a face value of 10 lakh rupees by paying rupees 5 lakh. Means this bond is issued at discount, right? So what is the amount the company is paying? The company is paying how much?
5 lakh.
And what company will get?
5 lakh.
What
10
company
lakh.
will get?
10 lakh
10
rupees.
lakh. 10 lakh plus
So,
10%
yes.
interest.
After 5 years, the company will get 10 lakh rupees, but the company has invested 5 lakh rupees. Effective rate is 15%. What does it mean? It means that how come this 5 become 10 in 5 years? Because the company is getting a 15% rate of interest every year. The firm recognizes proportionate interest income in its income statement throughout the period of the bond. Every year 1 lakh rupees they have recognized as an income, so that this 5 lakh become 10 lakh rupee, right? This 5 lakh become 10 lakh rupee. Based on the above information, answer the following question. How the interest income will be treated in cash flow statement during the period of the bond? How this interest income will be treated? Whether this interest income of 1 lakh rupee will be also recorded in cash flow statement every year?
No, sir.
No, you say that they are following the accrual concept. It should not be cash flow is not involved in this.
Cash flow is not involved in this, but if they are following indirect method, then this interest income is already included in the profit before tax. So that has to be excluded. So this is a non-cash item or non-operating item. So this item needs to be adjusted, right? This item needs to be adjusted. Your profit before tax has been increased by this 1 lakh rupee of interest income. It has to be decreased in the operating activity calculations, right? But
Right,
in
sir. Because
but in investing activity, nothing has to be done. Nothing has to be done, right? So when in the first year, the company has deposited 5 lakh rupee. So in the investing activity, it has to be like investment in bond, 5 lakh rupee. Okay. So then when after 5 years, the company will receive 10 lakh rupee, then what will happen? Then 5 lakh is the repayment of principal and 5 lakh is like interest income received. Okay. So interest income will be treated as income over the period of the bond in the income statement. However, there will be no cash flow in these years because no cash has been received. On maturity, receipt of 10 lakh will be classified as investment activity with a bifurcation of interest income and money received on redemption of bond. 5 lakh is interest received, 5 lakh is principal received. Okay. Is it clear?
Yes, sir. Yes, sir. On receipt, both will be the investing activity on the receipt.
Both will be the investing activity. Both will be the investing activity. Okay.
Sir, one doubt, sir. In indirect method, what will do in operating? We will less it nothing.
Sorry, what you will do in?
in in indirect method, we will less that 1 lakh now
Yes.
as a non.
हाँ, आप उसको 1 लाख रुपए को लेस करोगे. सो वाई लेस करोगे? बिकॉज इन इनडायरेक्ट मेथड यू आर स्टार्टिंग विद द प्रॉफिट बिफोर टैक्स, राइट?
Yes, sir.
और ये जो 1 लाख रुपए की इनकम है, ये प्रॉफिट बिफोर टैक्स के अंदर ऐड होगी, करेक्ट?
Yes, sir.
तो आप इसको क्या करोगे?
लेस करेंगे सर.
लेस करेंगे इसको, ठीक है ना? बिकॉज ये नॉन कैश है और नॉन ऑपरेटिंग भी है. ओके, राइट, वेरी गुड. Now there are some specific points. What are the specific points? Standard says that in case of foreign currency transaction, okay, in case of foreign currency transaction, for example, the company has done some foreign currency transaction. So the effect of changes in exchange rate in cash and cash equivalent held in foreign currency should be reported as separate part of the reconciliation of cash and cash. For example, you have 100 US dollar. You have a dollar denominated bank account and you have $100 in the opening, $100 in the closing. In the opening, and you, of course, you are preparing your financial statement under INR. In India, you are preparing your financial statement in INR. Okay. You have a dollar denominated bank account in USA. In the opening, $100 was there. In the closing, $100 is there. Is there any movement of cash? अगर $100 ओपनिंग में थे, $100 क्लोजिंग में थे, तो कोई मूवमेंट हुआ कैश का?
No, sir.
No, there is no movement. There is no movement of the cash. Okay. But in the opening, the exchange rate was 80 rupee per dollar. So what is the INR value of this $100 in the opening?
8,000.
8,000 rupees. In the closing, it becomes 85 rupees per dollar. What is the INR value?
It will be 8,500.
It will be 8,500. In your balance sheet, the cash and cash equivalent, the opening cash will be reflected as 8,000 and the closing cash will be reflected as 8,500. Yes or no?
Yes, sir.
But is there any cash movement?
No, sir.
No, sir.
भाई $100 तो आपकी जेब में आपने $100 डाल के छोड़ दिया था, तो 100 रुपए का नोट तो 100 रुपए का नोट ही रहा, वो तो बढ़ा नहीं. So there is no movement. So standard says that whatever is unrealized, because it is unrealized, na, had if you would have been redeemed or you would have been converted this $100 in the at the end of the reporting period, probably you would have received 8,500 rupees. Correct? तो realized हो जाता. Then it will be realized one. But the only thing is why this value has increased, because there is an unrealized mark to market gain. There is an unrealized mark to market gain. Okay, unrealized foreign exchange gain. So standard says that your unrealized gain and losses arising from changes in foreign exchange rates are not your cash flows, right? So when you are preparing your cash and cash equivalent reconciliation, the impact, the foreign exchange impact has to be shown separately in the reconciliation, This is what standard says. So how will you show it? Opening cash and cash equivalent 8,000 rupees, add unrealized foreign exchange gain on cash and cash equivalent 500 rupees, closing cash and cash equivalent 8,500 rupees, tallying with the balance sheet. Because balance sheet में आपने unrealized mark to market लिया हुआ है. Correct? Is that clear? Is it clear?
Yes, sir. Clear, sir.
No netting of inflows and
This
outflows.
500 gain will be part of operating activity, no?
That 500 gain will be, yes, it will be part of operating activity, not part of operating activity. It will be adjusted from the profit before tax as a non-cash item. ये गेन, इस गेन की वजह से प्रॉफिट में क्या हुआ होगा? इस गेन की वजह से, अनरियलाइज्ड गेन की वजह से
Profit inflate हुआ होगा.
profit inflate हुआ होगा.
Profit
The profit
increase हो गया होगा.
the
Yes.
profit was increased. So now what we will do? We will
Now
reduce
we
the
will
profit.
separate it.
Now we will
subtract
reduce.
it, reduce it, right? And why we will reduce? Because it is a non-cash item. It is a non-cash item. Okay. Yes. So no netting of inflows and outflows. For example, you have given loan to the subsidiary for 1 lakh rupee. During the year, you have received 80,000 rupees. So what you will say? You will say 20,000 rupees loan given or loan given 1 lakh rupee and repayment of loan 80,000 rupees. You will net off or you will show gross.
Net it out, sir.
Gross, sir.
You will show gross, right? Netting of cash flows will not allowed. You will only net off your inflows and outflows. For example, your bank OD, your credit, your cash credit limit, which is there are a lot of fluctuation in the cash credit limit, right? So you have opened a limit of 1 lakh rupee, okay? And every day you are using the limit for 80,000 rupees. You are using the limit means you are withdrawing the money and you are depositing the money every day 80,000 rupees, for example. Your limit was 1 lakh rupee, and at any point of time your limit is not exceeding 1 lakh rupee. You are just doing rolling over, okay? So in the month, this 1 lakh limit will show 24 lakh rupees has been withdrawn and 24 lakh rupees has been paid, for example. So will it show the right picture? The user will get confused. The company has a limit of 1 lakh rupee in the balance sheet, only outstanding liability of 1 lakh. The limit is opened for 1 lakh in the terms and conditions of the loan. But this company has taken a loan from the CC limit for 24 lakh rupee and the company has repaid 24 lakh rupees. So don't you think the user will get confused?
Yes, sir.
So for these volatile kind of a transaction, for these frequent transaction, you can do netting of outflow and inflow, but normally you should not net your inflows and outflows. You have to show it on a gross basis so that the user will be able to know the company has given a loan of 1 lakh rupee to the subsidiary and 80,000 rupees has been received back. Okay, clear? Income
Yes,
tax cash flows. So I'll come to this part later on. Non-cash transaction, as I told you, bonus share, right? The assets acquired by way of issuance of equity shares, ESOP. So it is not included in the statement, but it has to be disclosed, right? Acquisition or loss of control of subsidiary. Acquisition/loss of control of subsidiary. This acquisition/loss of control of subsidiary, it has to be classified as investing cash flow. We have seen now. We have recently seen in some examples. Change in ownership interest in the subsidiary not resulting in loss of control. For example, the company has invested in a subsidiary 100%. It was a 100% subsidiary. The company was in need of the money and the company has sold out a stake of 20%. Earlier it was 100%, now it is 80%. Tell me whether the control is lost?
No.
No. Still in 80% there is a control. In 100% there was a control. In 80% still there is a control. So it has to be classified as financing cash flow. It has to be classified as financing cash flow. Cash flow from financing activity.
Sir, generally we will classify as the investing activity, right?
Generally,
we will classify as an investing activity when we invest in the subsidiary company.
So generally when you are investing in a subsidiary, it is an investing activity. Generally, when you are selling a stake selling a stake in a subsidiary, and when you are losing control, then it is an investing cash flow. But when your ownership interest is changing, right? When you are selling your stake, but it is not diluting your control, it is not losing your control, in that case it will be treated as a financing activity. It has to be treated like that the company was in need of the money, and that's how the company has sold the stake. The company doesn't want to lose the strategic control, but the company has just sold the partial stake in lieu of getting a money for the business. Okay.
Okay, sir.
This is only for those kind of sale in stake where the company is not losing the control. Okay.
Sir, even if the company in the first time is investing, when the parent company is having the 100% control is there, then it will be treated as a financing activity.
Sorry, I didn't get you. So it will be investing activity. It will not be a financing activity when the company is investing. So
No,
this
no, no. See, what I'm saying, see, if the subsidiary is full controlled by the parent company, so it will be treated like that the parent company. Say it's a mutually is controlling, right? Then it will be treated as a financing activity. The reason is that the full control is with the parent company.
no,
Even though it is
but it
no,
is
no,
an
no.
investing activity, na?
No, see, the parent company, whenever their capital structure is changing, that is investing activity. That is a financing activity. The same way,
Parent company capital structure.
right? The same way, when the subsidiary company is also the 100%, they are having their own control of that particular subsidiary company. Then, on that situation, it will be the financing activity only. But it's entire control system with the parent company, right? So then, how it will be the investing activity? See, when the selling the special point you have mentioned it, subsidiary not resulting from loss of control. Okay, control is there. Then you ask us to classify as the financing activity. Then why not we at the investment time? Why not we have to classify as investing financing activity? That is what my question is.
So let me explain that. Yes, let me explain that. This is A Limited, right? I hope the Excel file is visible.
Yes, sir, visible.
It is visible. So this is A Limited, right? So A Limited invested in the shares of B Limited. Investment is there, right? So B Limited. So I'll giving you three scenario, right? Scenario number 1, scenario number A. It is 50%, or let's say 40%. Scenario number B, 80%. Scenario number C, 100%. The company has, A Limited has invested in the shares of B Limited. Scenario number A, 40%. So when it is investing 40%, of course it is not a subsidiary. It is only an investment. Doesn't matter it is a subsidiary or not a subsidiary. The company has made the investment for the purpose of getting a return, right? For the purpose of getting a dividend, okay, or for the purpose of increase in valuation. So this investment is investing activity, right? Investing activity. Even though if the company has invested 80% and it becomes a subsidiary, control has come, so it will become a strategic investment. And again, it become an investing activity, but it doesn't matter. It is 40, 80 or 100. What you will get the return in the form of a dividend. Yes? All agree? Whenever you have invested through equity share, you will get a return in the form of dividend. And second, you can sell your stake and you can release your money. Yes? So the nature and substance is same in all the cases. The only thing is, in the first case, there is no control. In the second and third case, there is a full control. Means line by line, 100% consolidation will be there. In this case, there will be 80% control. In this case, there is a 100% control. Okay. Right? Clear? Okay.
Yes,
so it
sir,
is an investing activity when the company is doing the investment in a company. It is a complete investing activity. Now the company is doing the disposal. So, for example, the company was having 40% stake. It was a passive investment. So the company has sold the stake. The company has sold the entire stake, for example. So what is this activity? Investing, operating, or financing?
It will be investing.
It is investing activity. The company received the money by selling the stake. It is an investing activity. Second example. The company has invested 80%, right? So out of 80%, again, the company has sold the stake. So the company has sold the entire stake. So what is this activity? Investing activity. The company got the money, right? But from this 80% stake, the company has sold only 10% stake. Only 10% stake, right? The company has sold only how much stake?
10%.
10% stake, right? So by selling a 10% stake, whether the company is still having a strategic control or not.
Yes, sir.
Yes, sir.
Right.
It
They
has
have the
control.
strategic control. So they are selling 10% stake just because of raising the money, just because of getting the money, just because of their funding purposes, their investment purposes, they're running the business purposes, right? So standard says that when the companies are diluting their stake, but the companies are not losing their control, in that case, this redemption, this sale of stake, when they are not losing the control, it will not be treated as an investing activity, it will be treated as a financing activity. This is one of the exception which is given by the standard, right? So in this case, it is a financing activity. Okay. So same way, let's say, same way. Let's talk about this thing. 100% investing activity, right? So the company sold the entire stake, for example. The company sold the entire stake. Then investing activity. The company sold 60% stake. Then again investing activity, right? But the company has sold only 20% stake, or let's say 25% stake. Then Saminathan, then what is this activity?
Financing activity.
It's a finite.
This is a financing activity, right? Because when the company is selling this 10% stake here, it is not losing the control. It is not losing the control, right? It is not losing control. Okay. So this exception is only given. This exception is only given when the companies are not losing the control, right? अगर control पहले से ही नहीं है, तो investing activity ही होगी, right? So this is what the company talks about in case of disposal of investment in subsidiary, that what will be the cash flow activities, right? This is what the standard has given you as a rule, as an exception. Is that clear now?
Thank you so much for the concepts clarity, sir. Thank you so much. Now I got it.
Right?
It's an exception. Okay, thank you.
Okay. Yeah. Yes. So friends, now again, back to this. Income tax cash flows. Friends, as I told you, income tax cash flows. This income tax cash flows will your operating cash flow, right? I told you, the profit before tax, then you have to reduce tax. Okay. Standard says that normally it is reported as operating cash flows, but this income tax cash flow has to be shown with the relevant activity to which that cash flow belongs. For example, the company has a building for rupees 50 lakhs. The company has sold the building. So investment in building, is it a operating, investing or financing activity? What kind of activity is this?
It will be
investing activity.
Investing. The company has sold the building. Proceeds from sale of PP. What kind of item is this?
It's a capital gain will arise upon sale.
No, so proceeds from sale of building. It is a investing activity, right? It's an investing activity. Okay. So proceeds from sale of building is an investing activity. So when there is a proceeds from sale of building, when the building will be sold, so then it will be a normal income from business or capital gain?
It's a capital gain.
It's a capital gain. So the taxation would be different, right?
Yes, sir.
So the tax expense on this capital gain, you can identify what is the capital gain on that sale of building. You can identify, you can compute, you can calculate, right?
Yes, sir.
So Ind AS 7 says that this tax expense on the capital gain of the building, this tax expense on the capital gain of the building, has to be shown as a outflow from investing activity. So this tax is also required to be shown as a part of investing activity if it is determinable. If you are able to identify, okay, this amount of tax expense will become part of investing activity. But what happens if it is not determinable? Then the entire tax expense will become part of your operating. So if cash flow on account of taxes is not determinable, that how much belongs to which activity, then entire income tax needs to be shown in the operating activity. If a specific impact of income tax is determinable, then it is required to be shown in the respective heads. Is that clear? Is that clear, my dear friends?
Yes, sir, very much.
So for example, your total income tax, so let me show you one of this treatment in this case. For example, total income tax paid is 5 lakh. Capital gain on sale of mutual fund is 1 lakh investing activity. Tax on account of dividend paid. When you are paying a dividend, there was a concept of DD3 also, dividend distribution tax earlier. You remember that concept? Dividend distribution tax.
Yes, sir.
Yeah. So the total income tax paid is 5 lakh. 1 lakh is capital gain on sale of mutual fund. Tax on account of dividend paid 2 lakh. So how this has to be shown? For example, cash flow from operations, 10 lakh rupees. Total less income taxes paid. So how this 2 lakh have arrived? 5 lakh minus 1 lakh minus 2 lakh. So cash flow from operating activity, it is only 2 lakh which has been deducted for taxes. Cash flow from investing activity, assuming let's say it's a 6 lakh rupees. The cash flow from investing activity is 6 lakh rupees. So your income tax paid is 1 lakh. What is this 1 lakh? This 1 lakh is capital gain on sale of mutual fund. Cash flow from financing activity, assuming it's a 5 lakh, it's a 7 lakh rupee. What is your income taxes paid? Dividend distribution tax, 2 lakh rupee. So this is your net cash flow from financing activity, right? So friends, this is how you need to present your cash flow from taxes. Is that clear to everyone? Is this clear to everyone or not?
Yes, sir. Clear enough.
Important note on tax flows treatment. Friends, have you got the comfort on cash and cash equivalent, operating activity, investing activity, financing activity, reconciliation, unrealized foreign exchange treatment, bank overdraft treatment, cash flow treatment? Have you got the comfort on all these aspects or not?
Yes, sir.
Yes? Very good.
Yes, sir.
One of the illustration from ICAI study material, X Limited has paid an advance. X Limited has paid an advance tax amounting to rupees 5,30,000 during the current year. Out of the above tax, 30,000 is paid for tax on long-term capital gains. Under which activity the above said tax be classified in the cash flow statement of X Limited? Batao.
Investing.
Sir,
Investing activity.
30,000 will be the investing activity, and 5 lakhs will be the operating activities.
5 lakh will be the operating activity, 30,000 will be the investing activity. Okay. Okay. Very good. Very good. Is that clear? Is that clear?
Yes, sir. Clear.
Very good. X Limited acquired fixed asset of rupees 10 lakh. Again, one of the illustration from ICAI study material from Y Limited by accepting the liabilities of rupees 8 lakh of Y Limited and balance amount it paid in cash. How X Limited will treat all those items in its cash flow statement? X Limited acquire a fixed asset 10 lakh. PP 10 lakh.
2,000 का होगा, sir.
Sir, the 2 lakhs will be classified as the investing activity. The remaining 8 lakh is the non-cash activities. We will not report it.
Yes, because so Y Limited, so X Limited has paid only 2 lakh rupees, and the remaining 8 lakh rupees, the X Limited has accepted some liability of the Y Limited. So X Limited told Y Limited that you need to pay your creditor to 8 lakh rupees, so I'll pay your creditor in the future, not to worry, right? So he has assumed the liability and paid 2 lakh rupees cash. So only 2 lakh rupees has to be shown in the investing activity. So component of cash and cash equivalent disclosure, an entity is required to disclose the component of cash and cash equivalent and a reconciliation of the amount in its statement of cash flow with balance sheet item. Which reconciliation? Bank overdraft related reconciliation, right? And disclose the policy adopted in determining the composition of cash and cash equivalent as per Ind AS 1. Effect of any change in policy for determining component of cash and cash equivalent. So these are the sort of disclosures, not much relevant, right? So yes, let's discuss this illustration also. an entity has a bank balance in foreign currency aggregating to $100. You remember we discussed this $100 equivalent to
Yes, sir.
4,500 rupees at the beginning of the year. Presuming no other transaction taking place, no transaction, the entity reported a profit before tax of rupees 100 on account of exchange gain on the bank balance in the foreign currency at the end of the year. What would be the closing cash and cash equivalent as per the balance sheet? So no transaction, only 100 rupees of foreign currency bank balance, unrealized forex gain of 100 rupees. So your profit before tax, your profit, it is 100 rupees, but there is an adjustment of non-cash item of 100 rupees, right? So this cash flow from operating activity is zero, investing in financing is zero. What is your opening balance of cash and cash equivalent? 4,500. Closing will be 4,500. Closing will be 4,500, right? And what is your balance? What is your reconciliation? Cash and cash equivalent as per statement of cash flow 4,500. This unrealized gain is 100, and this is your cash and cash equivalent as per balance sheet 4,600. This is what we have discussed. That $100, 80 rupee, 85 rupee. This is what we have discussed. So this kind of reconciliation is required as a footnote of the cash flow statement. Yes? Geet, is that right?
And for bank overdraft also, we will do the reconciliation.
Yes, for bank
Right.
overdraft also you have to do the reconciliation. So bank overdraft is not a non-cash item, right? So, but bank overdraft is a part of cash and cash equivalent. In the balance sheet, it is shown as a liabilities, borrowings, short-term borrowings, okay? So these are the two reconciliations which is required to be given. Other disclosure not much relevant, okay? So friends, let's discuss one of the ICAI study material illustration on the cash flow statement. Let's discuss that. Illustration number 11, the full-fledged cash flow statement. We have done so many small illustrations. We have done also cash flow from operating activity by direct method, indirect method. So let's discuss one of the illustration.
Sir, I have one clarity on page number 3.129, sir. Investment in subsidiary, associate and joint venture. There is equity method and cost method is given that I could not able to understand what is the essence in it, sir.
Equity method and
Equity method or cost method. Investment in subsidiary, associate and joint venture. Page number 3.129.
page number 3.129. So where it is written in statement of cash flows?
Yeah, in statement of cash flow.
Okay. So page number 3.129. So shall I come to that after doing this illustration, if you don't mind?
Yeah, it's okay, sir. It's perfectly okay. I'm not disturbing your flow.
Yeah, yes.
Please go ahead.
So illustration number 11, right? This illustration number 11 is a full-fledged balance sheet which is given. Following is the balance sheet of Kuber Limited for the year ended 31st March 20x2. Okay. Comparative balance sheet, current year balance sheet. Property, plant and equipment. See how I'm reading this. Just listen me and how I'm acting, how I'm reacting, how I'm reading. So I'm reading the balance sheet. Property, plant and equipment 12,500. It becomes 13,000. Oh, it means there is an increase in property, plant and equipment. Probably there are some purchases also. Okay. I don't know. I'm just thinking. I'm just reading. Intangible assets have also increased from 30 to 50. While there was a depreciation, but again, intangible assets are increasing. Property, plant and equipment is increasing. Okay. Other financial assets, they have reduced from 170 to 145. Deferred tax assets from 750 to 855. Okay. So deferred tax assets, no much rule. Other non-current assets, 770 to 800. This non-current assets has increased. Financial asset has decreased. Okay. Then coming to the current asset again, investments. So your investments have been decreased, means there is a sale of investing activity. Cash and cash equivalent from 460 it become 220. Other current assets. So opening cash and cash equivalent, closing cash and cash equivalent given. Then your other current assets has also increased from 85 to 195. Means the company is not getting the money back. Total current assets, total assets are there. Then the equity share capital is same. Means there is no increase or decrease in equity share capital. Other equity also reserves in surplus. So this becomes from 8, it becomes 12. Long-term borrowings from 5,000 become 2,000. Probably there is a repayment. Other non-current liabilities from 3,600, it become 2,700. Probably there is a repayment. Trade payable from 90 to 150. Probably the company is not paying for the current purchases also. Not 100% paying. Bank overdraft is also there, which is 60 to 75. Other current liabilities has been increased from 200 to 300. There is a total current liabilities. There is a total liabilities. And this is the total equity and liabilities. Now some additional information is given. Profit after tax is given. Profit after tax is 4450 lakh is given. Okay. Interim dividend is also given, right? Interim dividend we have paid 450 lakh. So where this interim dividend will go? Where this interim dividend will go?
It is a financing activity.
This interim dividend will
Financing
go into the financing activity, right? This interim dividend will go into the financing activity. Okay. Depreciation and amortization charged in the statement of P&L during the current year. Depreciation and amortization given. Balance sheet is given, additional information is given, P&L is not given. So what we will do for this depreciation amortization, 520 lakhs, what we will do?
We will.
क्या करेंगे हम?
Yeah, we will add the add back.
We will
add back to the profit.
We will add back. This is a non-cash item. We will add back in the operating activity. During the year ended 31st March, two machineries were sold. So PP opening and closing balance was given. You remember it was increasing. PP opening and closing balance. Depreciation of PP is also given. And it is giving some information that two machineries were sold for rupees 70 lakh. 70 lakh rupee have been received. The carrying amount of these machineries as on 31st March 2002 is 60 lakhs. Okay. So carrying value of the machinery sold is also given. Carrying value of the machinery sold is given. So for 60 lakh rupee of machinery, the net block of 60 lakh rupee has been reduced, but the money has been received at 70 lakh rupee. Income taxes paid during the year is 105 lakhs. So what you can do, you can start with profit before tax. Profit after tax is 4450. Income tax paid is 105. So what is your profit before tax?
It's 345. 4,345.
555.
So your profit before tax के लिए you have to add your tax into profit after tax. Profit after tax is 4450. Right?
Sorry,
and your tax is 105. So you will add na profit before tax is higher than profit after tax, right?
Yes, sir.
So that is one way. So that is the one way. But what will happen? That is the one way. The second way is, so one way you will arrive at profit before tax and then you will reduce your tax expense at the end, right? Second way, you can continue with the profit after tax. So we will continue with the profit after tax, okay? Or if you want to present it, we can present it profit before tax also. Income tax.
Sir, generally we will present the profit before tax, right?
Yes,
in all the cash flow statement.
Yes, profit before tax. Other non-current or current assets and liabilities are related to operations of the Kuber Limited and do not contain any element of financing and investing activity. It is saying that all these non-current and current assets and liabilities are all operating. It is nothing financing nor investing. वो लिखा है ना ऊपर, other financial asset, other non-financial asset, लिखा है ना financial asset. You have seen the balance sheet now. You must have seen the balance sheet. In the balance sheet, there is a other financial asset, other non-current asset, right? Other current asset. So this information is saying that this is all operating. This is all operating, right? Okay, very good. Means no loan to subsidiary, loan to other party is involved in this, right? It is saying that only. Yes. So now we need to solve this. Now we need to prepare this cash flow statement. Shall I start preparing this cash flow statement? Shall I take you to the Excel file? मैं आपको एक्सेल फाइल पे लेके जाऊं?
Yes, please, sir.
Yes, sir.
Friends, this is my statement of cash flow. ICAI BOS study material. Right. Particulars: cash flow from used in investing in operating activity. What was my profit after tax? 4450. What is the tax paid? 105. What is my profit before tax? 4450 plus 105. Now what I'll do? I'll do the adjustment of what? Depreciation and
Non-cash
amortization.
item.
What is the number of depreciation and amortization? 520 lakhs, right? 520 lakhs. So depreciation and amortization is 500 plus 20 lakhs. It is 520 lakhs. It is 520 lakhs. Okay. Then there was a movement of deferred tax asset also, right? If you will go further, so let's go one by one. Okay, so this depreciation amortization is clear. This dep and amortization is clear. Now let's go to the PP. What is my opening balance of PP and closing balance of PP? 12,500 and 13,000. Yes, this is my opening and closing balance of PP. So my opening balance of PP is 12,500, closing balance of PP is 13,000. These two numbers are given, yes or no?
Yes, sir.
My depreciation on PP is also given, 500. So if my opening balance is 12,500, my depreciation is 500, then what should be my closing net block, assuming no other item is there?
Okay.
If 12,500 is the opening
13,000.
balance, 500 is the depreciation. What is the closing balance? The closing balance should be 12,000. Depreciation से value कम हो जाएगी ना?
Yes,
right?
sir.
And in the additional information, it was written that the 60 lakh worth of machinery were also sold. So how much we will reduce? 60 lakh or 70 lakh from the carrying value of the machinery?
60 lakhs.
60 lakh,
60
right? 60 lakh. So 12,500 minus 500 minus 60. What is this number? This number is 11,940. What is the total of this number? This minus this minus this. 11,940. But what is the number? What is the closing number? 13,000. What does it mean? It means there is a purchases. There is a purchases of PP of 1,060. So this 1,060 will become the balancing figure. What is this 1,060? It is a balancing figure between 13,000 and 11,940. Is this clear to everyone? Is this clear to everyone? Yes.
This 1,060 is a addition.
It is an addition. It is an addition. So where this 1,000? So let's do all the treatment of PP related treatment. So first of all, the depreciation and amortization. Yes, the depreciation and amortization. Correct. So the depreciation and amortization. Second treatment is investing activity. Purchase of PP. How this purchase of PP is coming? This purchase of PP is coming from where? The purchase
Investing
of PP
activity.
is coming from this
Investing activity.
working. Investing activity, this working, right? So this is purchase of PP, right? So this is also clear. Then proceeds from sale of PP. What was the number for proceeds from sale of PP? 70 lakh was the number. Correct? Clear?
Right, sir.
Now, there was a number for second line item in the balance sheet. Intangible asset. What is the number? Opening was 30, closing was 50. And what is the depreciation? What is the amortization on intangible asset? 20. Right? So 20 is the amortization. Even after amortization, this number has increased. So let's prepare the intangible schedule. Opening balance 30, amortization 20, closing balance 50. So what would have been the closing balance? If only opening balance or amortization is there, what would have been the closing balance? It should be 10.
40.
It should be 10.
Yeah.
Yes.
भाई ओपनिंग बैलेंस आपका 30 था, उसमें से 20 अमोर्टाइजेशन हो गया, तो बचना कितना चाहिए? 10. बट कितना बचा है?
50.
So what does it mean? It means there is an addition. There is an addition of intangible asset. There is a purchase of intangible asset, right?
Yes, sir.
So this purchase of intangible asset, this amortization I have already covered, 500 plus 20. And this purchase of intangible asset again will go to the where? Again will go to where? Investing activity में जाएगा ना?
Yes, sir.
Investing activity, it will go in the investing activity. Yes or no?
Yes, sir.
Yes, sir.
Yes,
Now,
sir.
let's go to the next line item in the balance sheet. PP we have covered. We have intangible assets we have covered. Third one is other financial asset. It is all operating. Your other financial assets have been decreased from 170 to 145. Where it will go? It will go to the
Operating.
changes in operating assets and liabilities. So before operating profit, right? पहले आप क्या करते हो? प्रॉफिट बिफोर टैक्स से स्टार्ट करते हो, देन आप एडजस्ट करते हो नॉन कैश आइटम, नॉन ऑपरेटिंग आइटम एंड चेंजेस इन ऑपरेटिंग एसेट्स एंड लायबिलिटीज. Sorry, I forgot to adjust this part also. 60 rupees of asset has been sold for 70 rupees. It means there was a gain on sale also, right? Of PPE. So it will also be reduced. Correct?
Right, sir.
Yes,
Right?
sir.
So now changes in operating assets and liabilities. There's a decrease in other financial asset by how much? From 170 it become 145. So it will be a increase in the cash flow. Yes? बताया था ना?
Yeah, 25.
Decrease in the current assets means increase in the cash flow. Yes? And increase in the asset means decrease in cash flow. Is this clear or not clear?
Decrease means we received the cash, so we are adding it.
You are liquidating your asset. You are getting money from selling your asset. Decrease in asset means you are receiving cash. Okay. So any other adjustment for this financial asset? No. Then deferred tax asset. Any adjustment for deferred tax asset?
Yeah, but whenever we are creating the deferred tax, we will debit the deferred tax and credit to profit and loss account.
Yeah.
To the extent it's increased, so we have to reduce it.
Yes. So basically what we have done, so when we have arrived at the taxes, right? So there is an impact of deferred tax asset also. There is an impact of deferred tax asset also. So it has moved from 750 to 855. It has moved from 750 to 855. It means there is a deferred tax asset charged during the year, right? So this 105 of deferred tax asset charged during the year, either I can use here also, or I can use as an income tax paid. So if I'll start with the profit after tax, here I have started with profit before tax, and hence I am doing this adjustments, and hence I am doing this adjustment. Okay, right? Is that clear? So I am doing this adjustment of deferred tax asset charged during the year. Deferred tax asset charged during the year. So because the taxes paid was 105. Okay. And this 105 treatment should also be there. This 105 treatment should also be there. Okay. Right? Is that clear? Because I don't have the P&L account. I have only whatever is money which I have paid. I have only 105 as a paid. So this will also reduced. This deferred tax asset charge will also reduced. Then what is the next item? What is the next item, guys? What is the next item? Just a minute.
Other non-current.
Other non-current asset, it is increased from 770 to 800. What does it mean?
It's
770
increased
से 800 हो गया, बढ़ गया. Your asset
It
has
means we
increased.
have
Means
purchase.
yes.
purchase. We have cash flow is there, outflow.
Outflow is there. So increase in current asset means decrease in cash flow. Okay. Then you have financial asset, your investment. Your investment is decreased from 2500 to 2300 means redemption of investment. Redemption of investment. So redemption of investment means what? What?
We received the cash.
Yes, redemption of investment means increase in investing activity. Investing, it's an investing activity item. It's an investing activity item. Proceeds from sale of investments. 2500 minus 2300. Okay. So it is your investing activity item. Correct?
Right, sir.
Right? It is your investing activity item. Then what is there? Then what is further? Your cash and cash equivalent will become part of opening and closing cash. Other current assets has been increased from 85 to 195. What does it mean? From 85 to 195. What does it mean? Increase in other current assets, 85 to 195. 110 is the increase in other current asset. Okay. Right?
Purchase date, cash outflow.
It's a cash outflow. Okay. Then we have so we have completed the asset side, and what we have completed as an information. So we have completed this profit after tax. Interim dividend we need to take into account. Third point we have cleared. Fourth point we have cleared. Income taxes paid. I started with profit before tax. I'll adjust that also. Right. Other non-current or current assets and liabilities we have adjusted. So income taxes paid and the interim dividend, right? From the information side, from the other information side, 2 item, income taxes paid, money outflow. So cash flow from operations. So just I have parked my income taxes paid of 105, and I have also parked my interim dividend paid in the financing activity side. Any doubt up to this level? Any doubt up to this level, guys?
Sir, we have here assumed that the purchase of PP is in cash, no?
We have
Assumed that purchase of PP in cash, no?
we have not assumed, we have calculated. We have calculated. आप मुझे बताइए, अगर आपके पास 12,500 रुपए का ओपनिंग बैलेंस है पीपीई का, राइट, और आपका 500 का डेप्रिसिएशन है, और आपने 60 रुपीज का पीपीई बेच दिया, तो क्लोजिंग बैलेंस कितना बचना चाहिए आपके पास?
Sir, in this case, if the closing balance is 10,000, which means there is no addition, the sale will be there.
In which case?
Suppose the PP's closing balance now is 13,000. Because of that, we have addition 1,060. If the closing balance is 10,000, the sale will be there.
Yes, of course, the sale will be there. But in this question, you have opening balance of 12,500. You have depreciated during the year 500. You have sold 60 rupees worth of PPE. So your closing balance would have been 11,940. But it is 13,000. So it means there is a purchase of PP. It is a calculated number. It is not the assumed number. It is calculated number.
Sir, it is calculated, but I am asking that it is cash purchase, no?
हाँ, yes. अगर कैश परचेज नहीं होता तो आपके क्रेडिटर में आ जाता ना वो, राइट? वो क्रेडिटर फॉर सप्लायर कहीं लिखा होता ना, राइट? सो इट इज अ कैश परचेज. अगर कुछ नहीं लिखा है तो आई विल एज्यूम इट दिस एज अ कैश परचेज. ओके, राइट?
Yes.
Okay, sir. Let's go further. Now come to the liability side. So of course we will not touch equity and other equity. Equity is same. Long-term liability is reduced from 5,000. It is reduced to 2,000. Means 3,000 rupees has been paid. Other non-current liabilities, it is also reduced. So decrease in liability means outflow of cash, right? So this decrease in liability, decrease in long-term borrowing, increase in trade payable, bank overdraft, we will take it part of the cash and cash equivalent, and there is an increase in other current liability also. So first of all, decrease in long-term borrowing, where it will go? Decrease in long-term borrowing, where it will go? कहाँ जाएगा decrease in long-term borrowing?
Yeah, it is a financing activity.
Repayment of long-term borrowing, cash flow from financing activity. Right? Repayment of long-term borrowing. Then there is a other non-current liability. There is a decrease in other non-current liability. So decrease in non-current liability, where it will go? Decrease in other non-current liability, 2740 minus 3615. It will also, it will reduction in cash flow, operating activity reduction, increase in trade payable from 90 to 150. It is when your trade payables are increasing, liability are increasing, it means you are not paying cash, means your cash flow is increasing, right? So आपको अगर एक चीज समझ में आ जाए ना कि इंक्रीज इन करंट एसेट्स में नेगेटिव होगा कैश फ्लो, तो डिक्रीज इन करंट एसेट्स में क्या होगा? डिक्रीज इन एसेट्स में पॉजिटिव. अगर डिक्रीज इन एसेट पॉजिटिव है तो डिक्रीज इन लाइबिलिटी क्या होगा? नेगेटिव. तो इंक्रीज इन लाइबिलिटी क्या होगा? पॉजिटिव. So if you understood one equation, you will understood all three equations. Just reverse. Increase in other current liability, it is also increased from 200 to 300. It is means your cash is increasing. So you will get a cash flow from operations of 4130. This is your net cash changes from operating activity. This is your investing activity. This is your financing activity. Your net cash change from all the activity A plus B plus C is negative 255. What is your opening cash and cash equivalent? Opening cash and cash equivalent. 460 was the opening cash and cash equivalent. 60 was the bank overdraft. Okay. So then it is your closing cash and cash equivalent. It is your closing cash and cash equivalent is 145. Okay. Right. So this is the closing cash and cash equivalent. And this closing cash and cash equivalent, you can tally with your balance sheet also. You have to give the reconciliation. What is your closing cash and cash equivalent? Your closing cash in the balance sheet is 195. And what is your bank code is 75. Sorry?
There is 220. Cash and cash equivalent.
Oh, sorry.
It's 220.
It's 220. Sorry. 220 is the closing cash and cash equivalent, and 75 is the bank overdraft. Okay. 220 minus 220 minus 75. 145 is your closing cash and cash equivalent. This is what it is reconciling with this number. So have you got some comfort after looking at this cash flow statement? Yeah.
Yes.
Yes. Yeah. Somebody was asking, I think. Any question? Any question on this illustration number 11?
Sir, in the other equity, there is an increase for 4,000.
So this was a result of profit, dividend, right? So you are not required to do any adjustment from this other equity. Okay. Because it is a resultant. Other equity is always a resultant number of your changes in assets and liabilities and your profit or loss from the profit and loss account. Okay.
Okay, sir. Got it.
So friends, if I talk about the difference between bank OD, between Ind AS 7 and AS 3, so bank OD has to be treated like cash and cash equivalent, but in accounting standard 3, it was part of financing activity. Cash flow from extraordinary item. You remember in Ind AS 1, I told you nothing is extraordinary in Ind AS and IFRS. So in AS 3, if there is a cash flow from extraordinary item, it was required to be disclosed. But in Ind AS, no such thing. Investing activity, it says that only expenses which result in recognition of an asset. So it's just a theoretical part. But you know, AS3 was very small standard, limited guidance. But in Ind AS 7, very detailed guidance are there. So presentation, more guidance are there, comparatively less guidance were there. Okay. So this is your thank you slide. So Saminathan, I will revert back to with your query. So can you please write your query at cacs.alokgarg@gmail.com. I will call you and I will explain you, right? So because I have to wind up the session, it's 10 a.m. I have to wind up the session, right? So friends, if you have any question, quick question, I will be happy to take. I will take you through with a lot of questions from ICAI study material. Please do all the questions from ICAI study material, right? All the question is your homework. Open the study material, do all the questions, and this is how you will get 100% comfort on this Ind AS 7. Believe me, if you will solve all the questions and if you have understood the concept, nothing will come beyond this study material in the exam. Believe me. Thank you so much. So Saminathan, my email ID is, and for everyone, my email ID is cacs.alokgarg@gmail.com. Right?
सर
Yes, madam.
सर मेरे पास जो स्टडी मैट है वो 2022 का है, तो मुझे न्यू वन बाय करना होगा?
2021 का मैडम आपको बाय करने की जरूरत नहीं है.
22.
So you don't need to buy, right? The updated material is already available on the ICAI portal, on the Board of Studies portal. You can download that. Right?
Okay.
Shilpa ma'am, would you like to say anything? If you are there. So the updated material is there on the ICAI website, right? On the Board of Studies portal. If you will Google like Ind AS 7 latest Board of Studies material for CA final, you will find that.
Okay, sir.
So thank you so much, friends. Thank you so much. Have a good day. Take care. I hope you have enjoyed the session and you have understood the session very well. Thank you so much.
Thank you so much, sir.
Thank you, sir.
Thank you.
Yes, sir.
Good day.
Thank you so much, sir.
Thank you.
Thank you, sir.
Thank you.